Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, everyone. Welcome back to another live stream, and I hope you're doing well. I hope you're staying safe. As always, in these crazy markets this year, it's been a lot of volatility. However, things have calmed a little bit here recently. Take a look at the VIX, down 3.5% today. You got a good move lower here on the VIX. If we take a look at indices this morning, some confidence on the NASDAQ. We've got the S&P 500. After there was some announcements that there is plans to speak with China, which is, of course, a positive signal for risk assets. Bulent in the chat, good to see you, my friend. Bitcoin is going to the moon. My portfolio is going through some very busy times. Yeah, Bitcoin's running. Man, that's a great move there. Wishing I was in that trade right now. Risk assets, like I said, performing well today. And it's been a theme here. If you've been watching regularly, we've talked about the Bitcoin to gold ratio as a really good indicator, as a timing indicator of sentiment. Check this out. So again, even if you don't like Bitcoin or trade Bitcoin, like you can understand that thing is a risk asset. It typically does really well when everybody is feeling good, and it does really bad when people are worried, right? So here's the thing. Bitcoin to gold ratio has been trending lower. Gold has been outperforming. People have been scared. Well, that all flipped. This Bitcoin to gold ratio signaled on April 21st. That's a couple weeks ago now. That sentiment had actually flipped into more of a confidence standpoint. Take a look right here at the gold or Bitcoin to gold ratio. That is the first instance in which our downtrend reversed and has now become an uptrend, right? Also, Mohammed says, where can I find your referral to Maven? They don't have a referral link with us. They're just doing some advertising with us, but I would highly recommend that if you are looking to check them out, do your research, see if it's right for you. They have some of the best prices I've seen in the prop firm space. So definitely worth exploring them, see if they're right for you. As always with prop firms, I always say this, they're not for new traders, right? Prop firms are for people who are very talented traders, only in my personal opinion. And I do not encourage people to use prop firms until they feel like are very, very qualified to be trading other people's money. Most people, if they're very honest with themselves, are not ready for that. They think they are because they want to scale up. But really, I would just encourage you, they are a tool, but if you've never used a chainsaw before, you should be careful, right? Same thing with prop firms. If you've never used a dangerous tool in real life, prop firms are the same thing. They can be really dangerous tools. People think, oh, I'm just throwing a couple $100 at these things each time. That can't hurt me that much. But again, I've heard horror stories, and I don't know if you guys have too, but there are many traders who quietly have gone through 30 plus, prop firm accounts, blowing them all, losing money. And then you might as well have just blown a 10 grand account because you just spent that much in prop accounts, right? So be careful. Prop firms and eval, firms. They can be a tool to use for talented traders, but that is it. I'm afraid of chainsaws too, Steve. I own one. I have a electric chainsaw. My dad, my whole life until I was like 20 years old, he was like, you got to be real careful with chainsaws. And no, I didn't have some sort of terrible accident, and God forbid I don't, or I do, but just something to think about is those things are dangerous, right? Prop firms can be the same way in the trading space, so just be cautious with that stuff. Um, there's some real bright sides in the trading world, and there's some real dark sides to the trading world. The bright sides is that I've seen a lot of people who have like really gone far in the trading industry. Like they've done really, really well for themselves. The downside is that that's like 1% of the population, and 99% of people have really painful lessons that they learn. And guess what? In terms of painful lessons, I'm one of the 99%. Actually, I think let me take that back. 100% of traders have really painful experiences. And only a very minute amount of those people actually go on to overcome them and become profitable traders. Okay. LMS, thank you for the question. Euro USD, buy or sell. But I would encourage you, first of all, please don't spam our chat. We got a great, lovely little community here, and then comes in LMS forever, dropping euro dollar, buy or sell. Come on, man. It's like we're having like a nice tea party here, and you just came in with a chainsaw, speaking of chainsaws, and just cut through the table. I will be taking a look at some charts, so I apologize for ranting as always, but we'll get to currencies, we'll get to gold and stuff like that, but please don't spam the chat, or we'll have to ban you into oblivion. So S&P looks really good. NASDAQ looks really good. I'm feeling FOMO, guys. I would be lying if I wasn't feeling FOMO or telling you that I wasn't feeling FOMO. So my perspective on stocks and indices has been very, very overall right. Now, was I early to thinking that the indices were likely not going to continue to plummet? Yes and no. So on my channel, you can go back during all these dates and watch my videos. The comments section was a bloodbath. People who never watch my channel flooded in because I got a lot of views during this time. I'll tell you straight up, this was a great time for YouTube content in the trading space because everybody had questions about what was going on. But I can tell you this, the bears absolutely like attacked my channel. Go look at the comment section during this time. I know someone's going to go do that. You'll have some enjoyment. I did. It was interesting. You had all the bears come out of the woodwork. It's amazing, these guys. I think they hibernate. Well, hey, they're bears, right? They hibernate. This is the perfect. Maybe that's why they call them bears. They hibernate most of the time, and then all of a sudden they come out swinging. Everybody on the bear side of things. Oh, this market's been pumped up for 2 decades on hot air, and it's now going to crash to zero, and it's all over, right? People were absolutely sacrificing me in the comment section. Well, I take it back. There were a lot of people that had never watched my channel before that were coming in and calling me an idiot for being bullish on the market. Okay. Now, I am not saying, ha ha, I was right. Because when I started buying stocks, I started buying stocks over here. So was I right in calling the bottom? Absolutely not. Like, I'm not bragging. Okay. I bought some stocks here. And I did buy aggressively here. Did I catch the absolute bottom? No, but I got pretty close in terms of when I was buying. I bought here, so I was early. I bought here, I was still early. I thought we were breaking out here. I was wrong. So I'm not here. I'm not patting myself on the back and only pointing out my correct decisions. But let me explain, right? I scaled in. I dollar cost averaged with no leverage. And let me tell you how this played out for people. I know this story well. Everyone who's new to trading, listen to this for a second. This is a rotating wheel. People get churned in this system and spat back out. This is how the markets work. When this market was selling off like this, people were buying puts, which are essentially a leveraged way to bet on the markets. I know this to be a fact, not a guess, because we track that data. Look at the put to call ratio. This shows you that the volume for puts went off the crazy deep end, okay? People, look at this time. April 3rd, April 4th, April 5th, April 6th, April 7th, April 8th, it peaked out in terms of bearishness in the actions on the options market. April 8th was right here, guys. Right there. That's when people got peak bearish. And again, go look at my comment section in that time, and you can prove to yourself what I'm telling you. People get loudest on the bear side at the bottom. My comment section, I swear, might be one of the best trading indicators in the world. I'm not even kidding. I use it all the time. Hey, I'm not ashamed to say it. I use my comment section as an indicator. Now, you guys who are regulars, who have respectful comments, who have, insightful thoughts, even if you disagree with me, there's nothing wrong with people disagree with me all the time. I don't mind that. It's the name calling and like the people calling me an idiot or all caps spammers. You guys know who I'm talking about. I'm not saying like this hurt my feelings. I'm telling you that when those comments flood into my channel through my history of doing YouTube, those have been market bottoms. So I'm telling you this because, again, that's how this market destroys people, is because people get so bearish at the worst possible times, and they also get bullish at the worst possible times, and they have a herd mentality to them. So this was an excellent indicator that, again, doesn't mean that we have to turn around right away. In this case, we did. In this case, we reversed so hard and absolutely destroyed all those bears. Why? Why do I know that the bulls won big time here? They absolutely destroyed the bears. You know why? Because bulls, and I'm saying this, I'm taking an extreme straw man example. So bear with me. I'll rectify it in a second. So I bought some stocks here. I bought some stocks here. I bought some stocks here. No leverage, no huge gamble, no massive risk to my account. I bought stocks gradually on the way down. Let's cross that with my ultimate straw man example of the extreme bear who put their entire account, they sold all their stocks and they bought puts aggressively. What happened to that person? Well, if you know how options work, they can expire worthless. So you can lose 100% or quadruple your money depending on what happens next. So let's say, since we took this as the example, April 8th was the apex. It was the highest point of put buying that went on this day. So let's say people were expecting the market to take out the lows and to crash further. If you bought those puts the very next day from peak pessimism, that was Liberation Day in a different way. It liberated the bears. They got absolutely liberated because that was a horrible, if you bought puts on the peak day of bearishness, like everyone else did, you got destroyed. And what did the bulls, the cautious bulls, do? They averaged into stocks for the long term that have great futures ahead, despite the political fear and headlines going on. Doesn't matter if you like Trump or not. This is a market story. Doesn't matter who the president is. Doesn't matter what your political views are. This happens over and over and over. But people let their politics get in the way. People let panic settle in, and that gets them to sell their whole, portfolio. Yeah, Lincoln. I mean, people got obliterated on this day. Now, this was my best trading day of my career. From a perspective, I was long gold heavy during this time, and I was long a whole bunch of tech stocks. This was my best trading day of my career. At the peak pessimism, the risk to reward gets so attractive that I have to step in and buy stocks. That's something I've done for many years now, and it has worked very, very well. Will it work forever? No. At some point, there will be catastrophic tanking markets. But again, probabilities are all we can do in this game. And so I just explained that process to you because it's a really important lesson that I think many traders need to hear. When everybody gets bullish or everybody gets bearish, be very careful because the risk to reward is oftentimes in the opposite direction. So where are we at now with the S&P 500's put to call ratio? Well, we're right smack dab in the neutral territory. So this is why personally, you guys, if you've been watching me on the indices, I like them long, but I'm not chasing. In fact, my favorite indicator on the entire Edge Finder is the put to call ratio. I stare at it every single day. We got news in just a second here, guys. Let me not Missed the reaction. We have unemployment claims. Let's see if it moves markets. It has not been moving markets here recently. So let's see if it does anything this week. Unemployment claims coming in. Last week, they were a little soft, worse than expected. Let's see with a forecast of 231K. How's the jobs market looking here? Very curious to see, actually. Okay, 228,000 jobs, unemployment claims, pretty much as expected. So not a huge surprise in either direction. So we would not expect too much of a market move in either direction either. So I was just ranting about the put to call ratio. I love this indicator. It is one of my favorite things to look at. So why? Well, because sentiment, I've been talking about this recently in my videos. So you guys know I talk about it all the time: technical analysis, fundamental analysis, and sentiment. If you're new to the channel, these are the three pillars that I consider when deciding which trades I want to take. In a nutshell, I consider these three things. For fundamental analysis, tells me if I want to be bullish or bearish. Technical analysis tells me if I want to be, where I want to enter and where I want to get out. Technical analysis also helps with risk management for me. All of these things are important, but sentiment analysis, I think, is underappreciated by a lot of people. A lot of people on this channel, even, they're like, okay, technicals are a little overestimated. But what's underestimated is certainly fundamental analysis, in my opinion, and sentiment. Both of these things are underestimated by the retail trading world. Sentiment is really powerful. Why? The ultimate power of risk to reward or sentiment is risk to reward. You can sharpen your setups. Your risk to reward can become sweeter by learning how to properly gauge sentiment. Okay? How can you properly gauge sentiment? And why does that matter? It matters immensely. So I told you guys that my best trading day of my career personally was this move right here. At that time, I was long gold and I was long a lot of tech stocks. I still am. I've continued to hold my tech stocks since that time. This was the best trading day of my career. What made it the best day of my career? Sentiment. Sentiment was horrible. Everyone, it seemed like, thought the market was going to crash the day before. And then we ripped absolutely to the heavens on April 9th. Is that April 9th? April 9th, yep. On April 9th, we ripped higher. So everybody was peak pessimism. And then April 9th, you could see a slight drop, but people still pessimistic. People have only just recently come down into a neutral territory according to the put to call ratio. So when you guys hear me saying I'm waiting for a pullback for indices, what would a pullback do to this chart? Think about it for a second. So markets have done this. They crashed hard and now they've started to put in some higher. This is basically where we are. What would a pullback in the S&P 500 and the NASDAQ and the Dow Jones, the Russell indices, risk assets, Bitcoin, etc., what would that do to the put to call ratio likely? It would likely cause this thing to shoot back up into that extreme fear, high put demand territory, which would make the risk to reward attractive once more for a long trade. So I watch this thing really close. The put to call ratios, like I said, it's my favorite sentiment indicator within the Edge Finder, and I look at it pretty much every day. By the way, we do have the put to call ratio for more than just the S&P 500. We have gold on here. We have, so you can see gold is kind of still in neutral territory. We have even like the Nikkei, like what the heck is that move? That was the same time period, right? That April 4th post, kind of tariff announcements. We also have oil. We have gold, of course, Dow Jones, DAX. We even have Chinese stocks. So, which is crazy. Actually, I think we're missing some data on, are we? No, we're not. We're up to date. Okay. So you can look at these things and you can get a sentiment gauge. It's a really cool indicator, and it's like I said, it's my favorite one to look at. NASDAQ is just barely outside of the extreme fear range. And so I'm watching these things really close. They help me to time my entries very well. Sentiment helps with timing. It also helps with, it doesn't do all the timing work, but it helps with timing, and it helps with risk to reward factor. Does that make sense? I hope it does. That's really, something I've been discussing a lot recently is the put to call ratio in detail. Also, really quick, I just want to remind you guys, I'll do some questions here in just a few minutes. If you guys would like to leave me a question, maybe we can get that dropped in the chat here. We have a link to do that where you can submit your question to the live stream. And if you do it quickly, it'll be first come, first serve. I'll take some time out of the end of the stream here in just a minute to take some questions and answer them. So please feel free to ask a question. The link has been dropped in the chat right now. So yeah, take a second. That is first come, first serve. If you have any trading questions, trading psychology questions, let's take a quick look at gold. Yesterday, I discussed at length that the way this candle closed yesterday would be very important. And I would say that you had a very bearish close yesterday. Powell sounded pretty hawkish. If you were on the stream, we watched his full commentary start to finish. I would say it was a relatively hawkish sounding Powell. Today we get some, I believe we are awaiting the UK trade announcements or a trade deal potentially being announced, which I personally think will be the first of many. I think that, the markets are now pricing in, they're figuring out, okay, we're not going to have what's that guy? There's like Besant, and then starts with an N. Oh, why am I blanking on his name? Navarro? Is it Navarra or Navarro? There's another in the administration, there's another advisor that's very, very like extreme with trade. And the market, Peter Navarro, thank you, Tiger. Appreciate you. Yeah, so there's like the two extremes. The market likes Scott Bessent. The trade deals that are more negotiations are perceived as positive by the market. The market's like, okay, that we can work with that. But this guy, they need to keep him off, in my opinion. They need to keep him off the camera because he is very extreme with trade. He wants, he wants us to be like feudal Japan and isolate from the rest of the world, right? I don't think that, and for good reason, the market is very scared of that. Market does not like hearing from him, but trade policy moving in the right direction. Hey, we're going to make deals and we're going to, compromise on both sides. That narrative, the market's totally cool with, because we also know that with the administration, what comes next? What's after all this? What's after all the trade drama? Tax cuts, less government, and deregulation in corporate America. Less regulation makes businesses way more competitive on a global stage. In fact, when asked, many major CEOs actually opted for or found more valuable deregulation than less taxes, which of course you can kind of thumb your nose at that because you could say, well, a lot of businesses are very crafty with avoiding paying taxes, but that's another subject. The point is, deregulation is likely to make companies potentially even stronger if that comes into play. And I think that's what the market is looking forward to. That's the good side, I suppose, of all this. The trade negotiations, depending on how they go, do have a lot of risk. There's a lot of uncertainty, right? So, yeah. Lee says that's the point of tariffs, is to facilitate tax cuts. Yeah, I mean, that's the truth. The tariff is a tax. It's just a different way of writing it. So that's a fair point. Anyways, US to UK trade pact will leave the 10% US tariff in place. And I think the market is okay with 10%. Like 10%, we saw the reaction, by the way, on April 2nd. This move right here was the 10% baseline. What came after was the reciprocal tariffs that really spooked the market. So we know what 10% tariffs on the market, what the market's like, okay with that. The market's like, okay, yeah, fine. It's the, aggressive Chinese stance and stuff like that, that the market is not so much of a fan of. Anyways, let me answer some questions here with a few minutes to go before I forget. We'll take a look at that. Pull up some of you guys' questions here. We've got 5 questions to go through. Our first question is from Douse. They've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. And I keep on making the wrong decisions. I'm tired of it. I want to be a successful trader. So when it comes to becoming a successful trader, at the end of the day, one of the biggest mistakes that traders fail to make, the 2 biggest mistakes, is they fail to backtest and they fail to size down. So if you are struggling to become a successful trader and you're sick and tired of like losing money, go to minimum trading size. That would be my first suggestion. If you're trading Forex, trade 0.01. If you're trading stocks, trade 1 share at a time. If you're trading futures, go to the micros or whatever the smallest possible trade size you can do is, and trade that and just get your reps in. At the end of the day, trading for some people takes I've never really seen people take less than like a year to learn how to trade and be successful at it. It took me about 2.5 years to get to a break even, slightly positive phase. And then 3 years, I really started getting into a profitable stage. So my point is, it takes a long time. This is a really grindy process, and it comes with a lot of painful learned lessons along the way. I would encourage you to try not to make those mistakes financially, by reducing your trade size while you learn. If more people did that, there'd be a lot more profitable traders out there, because a lot of people just blow up their capital and then they're like, this is stupid, and they leave, right? Quitting trading oftentimes comes from, making the mistake of over leveraging, going heavy, and then really putting themselves in a bad situation and saying this is stupid and checking out. Next up, Singata. I apologize if I said your name incorrectly. My goal right now is to improve my trading psychology. Question is, what is the best way to unlearn bad habits? Because they're just hard to beat. So if you have a bad habit in the trading world, the first step is to acknowledge what that is and to see what you can do to avoid that problem. So let me give you an example. Let's say that you're somebody who, I struggle with over trading. I get excitement out of placing trades, and I am bored if I'm not in trades. And you're looking at the market that way, and you acknowledge that that's a problem that you have. What I would encourage you to do, some brokers and even like props and stuff, they have like a lockout process, like where you can lock yourself out of your account for the rest of the day. Could be a cool measure. But I think really the best way is to acknowledge that you have that problem and to systematize what you're doing to some degree. Like, for example, here's a quick example. Like, let's say that I use like a form submission service called JotForm for a lot of my stuff within my business. If I was struggling with that problem, what I would do is you could use Google Forms, you could use a free version of this, whatever. I would create a form system where it requires me to submit a form on why I took a trade before I place the trade. Within that form, I could ask myself, is this your second trade of the day? Or is this, let's say, have you taken a loss before this? You could put some way in it so that you have to objectively break your rules, and you're doing it so hard, you could like put something right in your face to say you are breaking your rules. Like, you could do that through a form submission system or a journaling system of some sort. The other thing you could do is get other hobbies, reduce your trade size, and when things are going wrong in your trading, or you just don't have a trade to set up, walk away, move on, find something else to do. Find some creative activity outside of trading to distract you. For me, I like doing physical exercise, going outside, running. I also like playing chess. I like doing other things, like find other hobbies. And when you feel that pressure, lean into your other things that you're doing. If trading is all that you're focused on, something's not right. I don't think that's a healthy way to approach trading. Next up is Percy. They've been trading 1 to 3 years. Their goal is to find a profitable trading strategy. And where do you think a dollar is heading? So I am currently kind of bearish on the dollar index. Most of my indicators here are mixed to negative on the US dollar at this time. So when it comes to bearishness or bullishness on the dollar, I would say I'm actually a little bit more neutral than I was perhaps a week ago, where all of this was red. We've had some good data points, like manufacturing PMIs and services PMIs came in better than expected. That flipped this thing a little bit, right? So I'm not outright bearish on the dollar at this time. It's part of the reason why I also got out of my gold longs, right? I look at this data to get an idea of that. So I always use the economic heat map to get an idea of where I think a market is likely headed next, as it simplifies the process. By the way, Edge Finder sale is ending tomorrow. Tomorrow is the last official day to get 45% off the Edge Finder for the sale event that we're doing. It's been 3 years since we launched the product. It's our biggest sale of the year. If you have not already taken advantage of that 45% off sale, we'll drop a link here in the chat right now to where you can ask for that special discount while the stream is live. So don't miss that opportunity. Let me do rapid fire these last two questions. Keto says, what's your outlook on fundamentals? How will China and US negotiation of future market events affect the market? So anything progressing positively between US and China will probably be a strong point for the dollar, US treasuries, and stocks, because the opposite was true in the other way. When trade negotiations worsened, all those things were negatively impacted. And we do have some optimistic news. I believe this weekend there's supposed to be some sort of initial, interaction with China, which is perceived as a positive thing. Next up is Kane will say, let's see, where's the question? The question is, I'm new to fundamental analysis, was wondering if things like interest rates, inflation, and unemployment claims also affect stock and shares. I'm in South Africa and I want to trade the local stocks, and I'm wondering if some of the concepts you teach could apply in my case. Hope it makes sense. Absolutely. Fundamental analysis is relevant to every single person on planet Earth. Gas prices, grocery store prices, labor data, statistics about the ability to get a job in your area. Fundamentals is all around us. It is the economy, right? The global. It is not isolated to Forex or just to gold or anything like that. Fundamental analysis affects every stock, every index, every commodity, every currency. It is the heartbeat. It is the blood pumping through the system to the markets. That is why they move, right? The markets are moving because of fundamental analysis. At the end of the day, whether you use them to make decisions or not, I've seen people who do well with them. Obviously, I know a lot of people who use fundamentals, but not everybody has to. Some people don't use them. I personally do all the time. I find it really vital to my understanding of why markets are moving, but to each their own. But yes, in your local, everywhere, all stocks, all indices, all commodities, all currencies respond to fundamentals, and embracing them makes it so that you can actually understand pretty much all markets. You're not isolated to one. You're not just trading euro dollar. You're able to understand why all these things are moving the way that they're moving. Okay, up next, we've got Miko and Marco joining for our Technical Thursdays segment. Sorry to keep them waiting. We had a lot of stuff going on here this morning in terms of questions and updates on news. Up next, we've got them joining here. Just this quick break. Stay tuned.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, and we're back with Miko and Marco for our Technical Thursdays segment, where we take a look at charts and ideas that we are watching today. Good to have you guys back on the show.
Hello.
So we do this every week, and we have a bit of a routine here. So I guess we'll lean right into it. In terms of our first segment, we usually start with just a chart of the day from each of us, just talking about what we're most interested, what potentially is either a trade that we're in right now and managing, or a trade that we're looking to get in soon. So Marco, you want to go first? What's on the watch list for you?
Yeah, sure. So for today, it's going to be Bitcoin for me, which is almost touching the 100K mark. We are very close to it. Unfortunately, did not get any pullbacks so that I can get in on my 1 hour chart, but at least it's moving by a lot. So Fundamentals are good, currently in a slight risk on environment, which is good as well. And I would like to see a bit of a pullback to, let's say, maybe these areas of support, and then I would look for nice buy entries. So I don't really want to buy right here on the top. But if we do retrace to a bit of a lower area, I will look for buy setups on the 1 hour chart. So for me, today Bitcoin is definitely the most interesting one.
Yeah, I love that. Actually, love that setup myself. I'm watching for the same thing. We've got a good, strong reading on Edge Finder, and the technicals look really good. Break away from that 94,000 level of support. If we do come back into that area, I'm with you on that one. I'm going to probably watch for some longs. Chart looks really good, and we'll see where that goes next. Miko, same question to you. What's top of mind for you?
Well, at the moment, I am short on NZD-CAD. No, sorry, I'm long on NZD-CAD. Yeah, I'm looking for a lot more upside for this one. I've been quite bullish on this one for a while, ever since we had that really big recovery a few weeks back, as we kind of we fell off a cliff, and then soon afterwards, price recovered most of that. And I'm looking for the continuation of that back into resistance. I hopped into a buy actually last week, but we've seen a lot of retracements since then, and I have gone to break even, so I could potentially be stopped out break even, but I will be looking for re-entries on potentially a double bottom there. So I'm still very interested in this one. I'm also short in Euro Yen, but I'm probably about a pip away from being taken out of break even for this one as well. So I'm still quite short bias on the yen pairs. We have seen a lot of weakness for the yen itself, but in terms of the technicals, we haven't taken out any major structure yet. So because we're still maintaining this swing high there, I still remain short bias. And same with pound yen as well. That's still maintaining these lower highs as well. So I'm still keen to find some entries to take this lower, but the entries is the important part. I'm looking to see what we can do at the highs here. If things look good, I will look for some re-entries as well. But that's kind of where my focus is at the moment.
Yeah, I like that. I like that NZD CAD chart, and actually that was going to nicely marry into my chart of the day. Just to follow up on that, is actually NZD JPY. So I went long the Kiwi yen. Came back down into this support level, although it's a very minor pullback on the daily chart. I did like this kind of break of this downward trend line that we've been watching for some time. We tapped back into this previous structure high just in the last few days, and I went long yesterday or the day before, I'm forgetting, but just very break even on the trade. Hasn't really moved very far, but I still like the setup. I think it has potential upside here, and I wouldn't be surprised if some of the the Australian dollar, the Kiwi dollar, these things are potentially in the process of bottoming out. It depends, of course, what's happening like macro wise, but if you get, trade developments, you got to remember that these countries are hypersensitive to that because, of course, New Zealand and Australia are major kind of contributors to global trade through their trade with China, right? So there's if global trade kind of frees up and improves with the whole like trade negotiation stuff, that is, especially think about this: if China and the U.S. land a deal, how does that help New Zealand? Well, because New Zealand and Australia export a lot of products to or raw materials to China for manufacturing, to producing things. That makes it so that their biggest customer is back online. So it is something that I'm thinking that we could see. I think that trade deals are likely coming. And so that's a trade that I want to be primed for. So fundamentals and technicals kind of broken down there. That's kind of my outlook on this one. Someone asked me just before you guys joined about the US dollar. I'm curious what you guys' thoughts are on this one as well. Marco, US dollar, any of the crosses that you're watching in relation to it, what are your thoughts?
Yeah, so let's go to the DXY, and I'm still pretty bearish. So I know Powell yesterday was a bit hawkish, which should be bullish for the dollar, but just the technicals are still telling me that the sellers are totally in control here with this massive meltdown, and the bullish candles are just not the biggest size. In terms of the dollar pairs, well, I'm watching EU for longs, I'm watching GU, I'm watching the Aussie dollar as well, but I'm waiting for a signal from the Edge Finder to possibly get in on some nice buy setups. I would like to see them pull back just a little bit more, maybe to some more areas of support. For example, pound to touch this area right here on the daily chart, and for the Aussie dollar to also possibly hit the 20 EMA or something like that. So bearish on the DXY, but I'm waiting for edge finder confirmations to actually get in on some dollar shorts on these three currency pairs. So that is the game plan for me.
Yeah, fair enough. I think I kind of am in the middle of that too. We've had some good economic data recently with the PMIs, which have kind of muddied the score a little bit for dollar index. So just going to continue to watch that. And I saw you there just real quick before I asked the same question to Miko. Marco, you were there yesterday during I saw you in the chat during that time. Did you have any thoughts? What were your thoughts on what was said from Powell yesterday?
Yeah, so at the beginning it was pretty much nothing, just we need more data speech. And then later on you could see that he was, I would say, hesitant about cuts, and cuts were expected already for the next meeting, which is now scratched. So I think the Fed has become more hesitant with the cuts for this year, and they're going to wait it out a bit more, which does give a hawkish signal because it means less cuts. So possibly holding the current rate for a bit longer, and that was the general sense I got from the meeting. So slightly hawkish, same as you concluded.
You know what I thought was interesting was there's an expectation in the bond market right now that there's still going to be 3 rate cuts this year. The reason I bring that up is that Powell, when pressed about what happened in 2018, which we did see trade war between U.S. and China during that time as well, he pointed out that they cut 3 times during 2018. However, he pointed out that the inflation situation was way easier in 2018. In fact, we had low inflation during 2018. So the point is, if we had 3 cuts in a low inflation environment where it's easier for the Fed to cut, maybe the hawkish stance that he took in response to it, maybe we're more likely to see something like 2 or 1. So the point is, again, we're dealing with higher levels of inflation at this time than we were in 2018. So perhaps more cuts or less cuts is potentially more appropriate. So just something to think. But
so do you think that's going to get priced into the bonds in the next few weeks, let's say?
Well, definitely has changed a little bit on my scope, just because, the U.S. economic heat map has we've seen some strong outperformance, like jobs came in better, PMIs came in better. So I think that the market was like pricing at 1.4 rate cuts. Now we've gone to 3. I think it is possible that we could see it make a move towards 2, which would be potentially dollar bullish in the short run. So I'm kind of neutral on the dollar. I would say I lean overall kind of bearish just because of the uncertainty going on and just a little bit of caution there. But we may have some potential bounce back in the dollar. And I'm curious, Miko, what that means to you. Do you think, like, obviously we're in a downtrend on the higher time frames, like the weekly time frame, et cetera. Do you think that the dollar index, which I know when we talk about currencies, you've pointed this out before too, this concept that they don't move in one direction forever, and that if we go really long term, like weekly chart, dollar index has been in a long term uptrend. So I'm curious what your thoughts are on the dollar index. I know maybe short term bearish, but is there a possible long term bullish trend that could be around the corner? And what would you have to see in price to kind of get there?
Yeah, potentially. I mean, I've been looking at the DXY quite a lot, higher time frames as well. And yes, we've been in an uptrend for quite a while now, since the late 2008, 2009. But still, the overall kind of consensus is still down, and we'll kind of come back into this area, which is very pivotal because it could lead to something like this, another leg as well, which of course very, very long-term outlook. But the key thing for me with the dollar right now is this kind of level just around 100, more or less. If we can crack that, it was a bit of a dodgy close this month. It technically kind of closes below, but not really with much conviction, so I'm not quite sold there. But if we can continue falling and really get below this 100 level, then I do think the next big target for dollar potentially is back down to 90 potentially. So I do have quite a bearish bias for dollar, but I want to see a bit more conviction below this level. Short term, yeah, I do think we can see some upside. The market looks like it's running out a bit of steam as well. We've taken out some big lows to the left here, and we're kind of looking a little bit corrective now. So I think dollar might be on its way up for a little bit, but if we can see that momentum in the higher time frames really come through, I think there's a long-term downtrend to be had. I know we've been fairly up. I think we could actually look to pivot and turn around. So yeah, I'm looking at a lot more downside, but maybe the first kind of few days, few weeks, we might see some upside because I think price probably still needs a retracement.
Yeah, no, it's been tricky to watch the dollar index. I mean, from a bigger picture, we aren't seeing the kind of trend you can see on your chart, like that 2021 through 2022, late or summer 2022. You saw that really one side trend. We now see kind of, the dollar index on a weekly time frame, quite choppy, quite back and forth. But I think you made a good point with this level here, that psychological 100 level, which I don't think is coincidentally a huge level of support when looking left, right? That's a 100 level is a really big level of support that you just mapped out. I think you're fair to point that out. Like if we get something like this to end out the month, yeah, that could signal that the dollar index, while it looked like maybe it's oversold in the short run, this is the point, is as you pointed out, the longer term can have these huge moves that, we saw over here in 2022. We could totally see the opposite happen if this, price can't hold. If we see trade deals don't materially improve or something like that, that could really be the catalyst for a bigger break in price to the downside. So very, very interesting to see where that goes next. I guess metals are up next. Last time we spoke, I believe, Marco, you were either in gold longs or you were looking at them or watching for them. What are your thoughts on gold and or silver right now?
Yeah, so waiting for a signal on the edge finder. I do think currently we are in a slight risk on environment, which is visible on the NASDAQ, for example. So my focus is on the NASDAQ. I'm looking for longs on the NASDAQ, which means I'm not looking to buy gold right now. If we get some more bad news about the tariffs, if we get some more, let's say, scares in the markets, well, then I would definitely switch to buying gold instead of the Nasdaq. I do think at these levels, gold is not really a great buy. I would like to see it come down to, let's say, back to this level of support or maybe even lower, somewhere here. So for now, the game plan is to be more patient. It is to focus on what is currently trending and what is currently makes sense in terms of the macroeconomic picture, which for me, as I mentioned, is the NASDAQ. If something flips, if something switches, if we get some bad news about the tariffs, then I will definitely give gold another try or look for some more buy setups here. So for now, pausing with gold.
Yeah, I feel the same way. I feel like the chart looks really good in terms of its upward trend, but a bit cautious on the fundamentals side. Same question to you, Miko. Silver or gold or both? What are your thoughts here?
Yeah, still as a whole bullish on both of them, but a little bit more awkward now. We had a nice kind of rally since last Friday, and ideally, I kind of want to be in these areas if I'm going to buy. I don't really want to be picking up any entries here. But the trend is still very much up. There's no kind of big sign of a reversal, at least from the technical side of things. We're still seeing consistent higher highs and higher lows. Momentum still looks good. Maybe we're slowing down as we approach resistance again, but again, there's no kind of big red flag. So I think overall, gold's still very bullish. Still looks good to buy, but in terms of where I want to pick up along, it would be a lot lower. So kind of coming back into this area, or even like Marco mentioned, back into this high, I think that would be a more appropriate place to pick up some longs if you're trying to catch a swing low, that is. Silver, on the other hand, is still bullish as well, but price action looks a lot worse here. So I'm struggling to find a good opportunity to actually get any entries, really. So silver, to be honest, I haven't been focusing on too much. I know that I'm expecting another rally, but I might want to have a push down first and then look to see if I can pick up some buys later on. But that looks like it's still a way to go. So still bullish on both of them, but gold for me, the trend still looks good.
Seems like that 29 area of support that you just mapped out briefly there is kind of a major spot in terms of kind of a longer term. Clearly, it was amazing how you see that giant drop, right? And then just a very sharp response 2 different times. Sharp drop, huge orders must have come in this area. So that seems like an area to watch. And I think that, one thing that you just explained there, Miko, that I think is really important to think about is like, there's no such thing as an easy trade in markets. Like nothing is easy. Trading is just hard as hell. But the answer is when it comes to the quote unquote easy trade, the easy trade is like what you just did. We looked at gold and I noticed that you're like, okay, it's been kind of messy here. There's not like we're not at like a clear spot. We're in the middle of these 2 zones that we all have mapped out on our screen. Same thing with silver. And what's painful for many new traders, and I think is really important to think about, is like, we're in no man's land and there's nothing to do here. Like if you're bullish on silver or gold, you wait for those levels and then maybe you have some decisions to make. But where we are now, like where we've been choppy on silver. So we've got to either, again, it's really kind of binary. I think most of us on this panel here are similar in thinking, where it's like, okay, you either wait for this or you wait for this, and everything in between is just waiting. So it's like, that's trading 101 is like, a lot of the time you are just waiting for a chart to line up and to give you that setup. And I think that's why they say trading is like 90% waiting. It really is. Whether you're in a trade and you're waiting for it to make a move to make your next decision, or you're not in a trade and you're waiting for an entry. I think it's an interesting one. Miko, I asked, or Marco already shared a little bit of his thoughts on the indices through his NASDAQ chart markup. What are your thoughts on the indices right now? They've been quite an interesting topic in recent months. Do you think that are they flipping back bullish, or do they have something to prove here?
It's interesting. I feel like we're at a very pivotal area of, I've been looking at NASDAQ. I've dragged the 200 moving average onto the screen as well. I'm kind of coming into it now, as well as a previous swing high as well, which kind of gave us that big drop late March coming into April. So for me, this is actually a very pivotal area. If you can respect this and start to see some wicks and some really strong rejection, I do think we can have a bit of a drop here. If price does rally through and we see an impressive bullish candle breaking through this, we're back above the 200, we're back above this swing high, well then I don't really see much stopping the NASDAQ getting back to its previous highs back at 22K there. So for me, I think all my focus is very much focused on this level here. If price can break through this, then we are looking at very, very bullish NASDAQ. And same thing for the S&P as well. I think that's coming into, not quite as NASDAQ, but it's coming into a similar area as well. If we can break through this, then I do think, price is likely to get back to highs. But if we do start to stall here, perhaps we do go through a bit of a sell.
That's a great point with the 200-day moving average and very, very close to being tested on the NASDAQ, as you mentioned. I would completely agree. If you're somebody who is bullish or bearish, right, we're coming into a really key spot here, because if you come up to that level and you just fail at it, like sellers just take back control, we've seen how fast this market can drop. And let's say this weekend or whenever they're supposed to have the negotiations with China, let's say that doesn't go very well. That could be a catalyst where price, bumps up and stops at that 200-day moving average. You get that negative catalyst and then it just completely plummets lower. We've seen how fast that can take place. But at the same time, if you're able to close decisively above it, I would signal that you've really kind of put the worst behind us decisively with that. So very, very pivotal spot and decision time for indices, I would say, for sure. What about yen pairs real quick? Marco, any yen pairs that you're watching right now?
Yeah, definitely. I'm watching NJ because it's getting quite a bullish reading on the edge finder. So fundamentals look very good. New Zealand has good employment numbers, good GDP. And for the Japanese economy, I think they got some bad employment numbers, or worse than expected, and a bit worse GDP, if I'm not mistaken. So we could get a bit of a uptrend here. What I would be waiting for potential buy setups is possibly for us to break this level, just a little bit more bullish momentum, just a little bit more bullish candles, and then I would be happy to possibly get in on a buy setup. So if you get a push up and then like a flag or a break and retest, I would be pretty happy to get in. In terms of the other JPY pairs, fundamentally they are not as strong, but I'm watching the Euro Yen, I'm watching the Aussie Yen. Euro Yen seems a bit corrective here in this spot. AJ, Aussie Yen also seems a bit corrective here. So I'm definitely watching the JPY pairs, but my top pick would be New Zealand Japanese yen, just because of the strong fundamentals. And it's kind of a risk on play, so it goes well with searching for a buy setup on the Nasdaq, right? Going long on AJ or NJ. So for now, this goes well with the overall narrative, has good fundamental data, but I just need a bit more bullishness on the technicals, just a bit more bullish momentum to print, let's say, on the 1 hour chart, and then I will be probably getting in a buy setup.
Yep, I mostly agree with that. I also like, of course, the Kiwi yen, as I discussed a little bit earlier. I think that one has some potential upside if we can really start breaking through some resistance points. Same question to you, Miko. I know you spoke a little bit earlier about like pound yen. Any other ones or things that you're watching in the yen universe?
Yeah, so I'm currently short on Euro Yen, but I think I'm just about to be taking out a break even for that one, if I haven't already. Yeah, I'm still quite short bias on Euro Yen and Pound Yen. We still have these really significant swings in the market. I'm looking to see if I can play into that and potentially catch another one. I hopped into some shorts there for Euro Yen last week. Price coming back to my entry. Potentially, I might still look for another re-entry if I do get taken out, as long as we can stay respecting the previous swing high. So I'm still short bias. If price was to rally and break through that high, I will look to reanalyze and think my bias. Pound yen, same scenario as well with this one as well. Still seeing really nice swing highs, 2, 3, potentially could be seeing a fourth as well. So again, if I can see sufficient rejection here on the 4 hour chart, the double top potentially could be shaping up quite well here. If I can see a good rejection, I'll be more than happy to get into a trade and targets back into the swing low. So yeah, I think these two yen pairs look the best for me. Aussie and New Zealand yen, they look like they could be turning. Potentially these could be turning as well, but I want to see structure broken first before I really look to invalidate my bias. Other yen pairs look a little bit tired, but I like euro and pound at the moment.
Very nice. Yep. I think, we'll have to see what happens next. Just to touch base on the topic that Marco was making, just about the Japanese currency index in terms of some of the economic strength here recently, just to showcase this. You mentioned, Marco, that we've had recently some softness in GDP data from Japan. We also saw, in terms of inflation came down from the previous report. PPI did actually go up. But at the same time, we see some employment data coming in a little bit soft. So unemployment rose in Japan just slightly. And then also we dropped off on some jobs. Retail sales had also been a little bit soft. So just something to think about is keeping an eye on this data point. At one point, this was all blue. It has now really kind of changed directions in recent times. So we'll see if that continues to contribute to why we might be seeing some of the yen crosses moving higher. So we'll have to keep an eye on that. Of course, very largely dependent, however, on what happens with trade deals. The Japanese yen acts as the global kind of safe haven. If people freak out, they buy yen. If people are feeling a little bit more confident, they short, or more specifically, even borrow from the Bank of Japan at their very low interest rates to go buy risky assets all over the globe. Guys, thank you very much, as always, for coming on the show. We've got your links in the chat right now. If you guys in the audience could do us a big favor, make sure to go subscribe to Miko's channel as well as Marco's channel. Both of them are linked in the chat. So explore their content to find more from them. They put out a ton of free value and free content to the trading community. And we really appreciate them coming on every week and sharing some tips and ideas and things they're watching for in markets. Guys, thank you very much for coming on this week.
Thank you.
Cheers.
Thank you. See you
See
next
ya.
week.
See you guys. Okay, up next, our very own stream favorite for everyone, it seems these days. It's Forex James. And also, I got to say, Forex James has some great Instagram content, and I'm going to try and learn from it and going to use some of those ideas, James, because they are awesome. Your reaction videos are very entertaining. And I see those kind of views that you're getting. I'm a little bit jealous. I got to figure out, I got to figure that out because you're playing that game really well. Anyways, up next, we got Forex James taking over the show to analyze some markets with you guys to hang out. We'll also be dropping the link to his YouTube channel. If you guys know him already and you're not subscribed, do us a favor, help the show out by supporting our guests who come on. This is a community-based stream. It's a team effort from our own in-person team, but also the really great guests that take time out of their day to come share value to the trading community. We don't pay them. They come on, they just share their ideas. And in response, our goal is to help them, share the love in terms of growth on social media. So, and James definitely deserves your subscription. So check him out. All right, up next, Forex James. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how's everyone doing? That was nice. I appreciate the kind words, Nick. So actually, just to quickly touch on that topic, I guess, I posted a Instagram reel today, and I'm not going to go into it too much, don't worry, just to kind of explain it, because I know the majority of retail traders will have this goal or this dream that they would love to get allocated capital. I'm not talking about prop firms. I'm talking about investors or even institutions allocating you capital. I saw an individual on X or Twitter yesterday that posted a tweet saying that they've been allocated 1 million, then after 3 months they'd get 5 million, then after a year they'd get 20 million. And this was apparently by a hedge fund. So I did a reel basically trying to explain how that type of thing really works, because it's not that simple. It's not a case of you'll get noticed and, JP Morgan would start giving you money to trade with. One of the big things, and this is why retail will never, has a very, very small chance of ever actually be making it into the big time with the big boys. It's not because you can't trade. It's actually because of your regulation. So if you look at the way JP Morgan or these hedge funds operate and their compliance and risk, they would never, ever give someone unregulated access to capital. You would have to be, as I said, regulated, or you'd have to be working under a licensed entity. So you'd have to have a firm that is able to manage investor capital legally. And then obviously that's not getting into the claims of capital, 20x capital in 1 year increases a bit strange, but anyway, like I said, it wasn't a video trying to expose someone or anything like that. It was more of an educational reel trying to explain how investment into traders actually works and what can happen and what can't happen, and those types of things. Anyway, let's actually get into the charts. Someone mentioned there's a Trump thing tonight, and I'll be honest, I didn't even know that was coming. Oh, it's actually pretty soon. It's in about 40 minutes. So yeah, I guess I'll be live for that on here, so we can pay attention. Like I said, I had no idea that was coming. I'll be perfectly honest with you. Very professional over here, keeping up with the news as we do. So the FTSE is still on the watch list, but I need to just make sure it's still on the Edge Finder. I'm a bit behind with my analysis today. I've been primarily paying attention to the unemployment news or the jobless claims. So let me just do this. So we don't want neutral. We want, let's get rid of that. So let's see what's here. So the Dow is still here. We've got the FTSE, NASDAQ, New Zealand dollar CAD. I think someone was looking at, was it Miko or Marco was looking at New Zealand dollar CAD, I think. That might be one to pay attention to. New Zealand yen, I think Nick's in New Zealand yen. I think he mentioned that one yesterday. So maybe we'll have a look at those ones as well and see if we could find a potential trade. So the FTSE, I still like the FTSE. We just had the Bank of England cut rates by 25 basis points. Now, the trade isn't as strong as it was because it sounded quite hawkish from what they said. However, I would still be willing to take a long because I think the Bank of England, and it's hard for me to say that I think they've misjudged inflation because they know far more than I do. I'm sure they've got much more clever people. But from what I have seen, I just don't think they're in a position to hold rates. I think they are going to cut again. But we can get to that as more data comes in. As Jay Powell says, we remain data dependent. But from a technical aspect, this still looks like a great trade. We've got the moving average cross indicating that short-term trend change to the upside. We've got previous structure here acting as, or potentially here acting as support. So we can see this break and retest pattern come into fruition. We've got previous structure here for a potential take profit. We've also got previous highs up here. Now I've mentioned the idea on FTSE. I've said this I think in the past 2 streams, so I won't go into it too much. But I would be very cautious trying to get new all-time highs on the FTSE, and that's mainly just looking at the typical behavior of the FTSE. It's very range bound and it's very difficult to really catch a runner unless you catch one of these moves, which is kind of rare because, like I said, it's typically a very sideways moving market. So it's not something I would be happy to hold into new all-time highs. I'd more rather use the previous highs as just hard take profits, and that's it. Take some money, get out, keep it simple. Bashi was in my stream today. Apparently he's bought a car that he's fixing up, so I think he's quite busy at the minute. What happened to my challenge of ICT? It's still going on, but yeah, nothing else. No updates really. My portfolio is still going, so I've reopened a CFD account, which I could show, but you know what? Hold on. I am going to show it because this is slightly separate. I can't show the name. It's not public, but I'll show it on stream and I'll refresh it so you know it's real. But the reason I can't show it is because I'm building this portfolio for a certain reason, which I'm not going to go into just yet here. In fact, you know what? You can't find it anyway. So there you go. Full refresh. It's live. So I'm up 7% this month on this account. But essentially what I'm doing is building a new company that's trading related that requires a 6 to 12 months track record, which is why I'm not really doing much in terms of showing off history and things, because I'm sort of just building it behind the scenes at the moment. As I said, I was on CFD, then had to switch to spread betting. Then I closed down my accounts because I was moving out of the UK. And now I've reopened them in a business account. So it is what it is. So I'll probably use that one to do the ICT thing, because I'll be honest, I don't think I'll get a reply from him anyway. So yeah, very small account. Yeah, that's the thing. That's another reason. It's kind of just building in the background. It's connected to my Darwin account, which obviously is one I'm sort of prioritizing just so I don't get lost in the source trading at, what is it, 3,000. It's one of those account sizes where when you're used to trading, 5-6 figures, trading back again on 2,000-3,000, it becomes very tedious, and it's very easy to get into I'm just going to over risk on this trade because I'm bored of taking a $10 take profit or whatever. It's a nightmare, to be honest with you. Anyway, let's get back on topic. What do you think about Swiss yen? Still in Swiss yen. Now, I spoke about Swiss yen yesterday, and I spoke about the real rates, and I'm not. It's tricky because I'm in a position now, because this is such a long-term trade. I mean, I've spoken about it so many times. I'm sure a lot of you are sick of me saying it, but I'm holding this trade for the next year, 2 years. It's not something that's a swing trade or a scalp or anything like that. So long-term, I do still think this market's going to the downside. We've got so much room to come down, and oops, that's not what I want. The long-term idea behind this is still very solid, with the Bank of Japan path to normalization, very high likelihood of the S&B going to neutral rates, if not even negative rates. but that's not the case right now. It seems like the S&P may hold rates in the next decision. The Bank of Japan is pretty dovish. They're not in a hurry to hike rates according to their last decision or their last meeting. The real rates for the yen are still very poor. They're in negative, meaning the yield you get from holding the yen is you're essentially losing money by holding the yen in theory. So it's not that attractive to buy and hold for investors anyway. So yeah, it's not a trade I would suggest short-term traders be in to the short side anyway, just yet. I think we might still see some higher prices, which is why I took profit. So I had a second entry here because I was on dollar cost averaging my way in on a higher time frame. Had another entry here the other day and took profits on this drop just so I could book some profits because, as I said, I do think we might see some higher prices. So if we can start coming up to these previous highs, I'll start scaling in again. Short term though, let's have a look. It's not on the Edge Finder. Oh, sorry, it is on the Edge Finder. I stand corrected right here. Swiss yen bullish reading of 6, although I don't think there's really, sorry, I've just got to put my email in here. I don't think there's anything that really sways my opinion to actually start taking long positions though. Score of 6 is good. But it's not overwhelming in my view. Retail sentiment is majority short, which, yeah, not great. Well, okay, let's go back to the chart. So if we're looking for a short term or a swing trade long, let's forget my short idea and let's go in with a clean bias. So we've got previous highs here, so resistance that we're going to just use as what it is for now. We've still got the H4 trend to the upside. 50 is above the 200 moving average. I would be looking actually basically for a retest either back into my initial entry to form this double bottom. Maybe we'd get a retest of this 200 moving average and potentially an oversold RSI here. That would be the technical setup. The other approach would be using the fib, looking for a 50% retracement into this 50 moving average, 50-50. Something like this. So we'd see the pullback in here, retest, continue higher. That could also be a play. But again, I just don't want to go long on Swiss yen right now. So that's probably a long-winded answer for your very simple question. So I apologize. But Swiss yen is one of those, if it's pretty much the only trade that I've got that I'm really paying attention to at the moment. How you approach market using ICT concepts, Ismail. So what you would do if you're looking to trade ICT is throw the idea out of the window, watch Trading Nick's content, watch my content, and pay attention to people that actually have a track record, people that live stream trading, people that actually talk about economics, and not someone who creates a new concept every 20 minutes then makes a full 12-hour series on it for ad revenue. Do you think we hit the bottom on SPY? I would love to say so. The thing is, and Nick showed me I think it was a trade idea by one of his members yesterday. It really got me thinking actually, because I was very focused on the general bullishness of the S&P. And when I say general bullishness, I mean the overall direction that we see on the S&P over the long term. And the idea that I never short it. It's just my personal rule. Unless there is something like COVID or a very, very strong reason to, I'm not going to even bother considering shorts. But if you think about it, nothing's actually changed really. We had tariffs, which caused a large portion of this. We've got a hawkish Fed. Well, short-term hawkish, because I still see the Fed going to cut rates this year. But for now, it sounds like they're going to hold. There was a lot of uncertainty in the meeting last night around tariffs and about the implication of tariffs on the economy. So it actually wouldn't surprise me if we do come back down on the S&P, the NAS, and possibly the Dow as well, to where I'm not sure we might come and create a double bottom and head back up, might create new lows, we might just come back down and create a higher low. I really don't know. But the concern for me is that we haven't really seen much of a development to warrant the S&P or the NAS to come back to the previous all-time highs. So yeah, it's tricky. On the other hand, on the other side of that though, we do still have the US stock markets bullish on the Hedge Finder. So we've got NASDAQ, we've got the Dow and the S&P right here. So those are still reading bullish in terms of just the economic indicators. The trend is bullish on the H4, so I would still take a trade long until excuse me, until I'm proven wrong. Then I can't really justify going short. So yeah, basically what I was trying to say in a nutshell is I'm not confident that the S&P or the Nas are going to go back to all-time highs just yet anyway, but I would be happy to take a few stabs at going long if we can see some reasonable pullbacks, just a previous structure. But I'm not going to get over leveraged. I'm not going to risk very much on those positions. And Luisa, hello. Sorry guys, I'm taking a bit more time to answer questions today, so hopefully I'm actually giving you a bit more value than what you might normally get from me. But that also means I'm missing some questions. Pound Swiss. I think my conviction on Pound Swiss longs has increased actually, and that's because off the back of the Bank of England rate decision today. So although they did cut rates, it was a hawkish cut. Now also, if we're thinking about the market sentiment possibly shifting. So obviously, like I said, we had tariffs come in that caused this huge risk-off move. So we saw the Swiss, the yen, we saw gold go to the upside, we saw risk assets take a hit. So it wouldn't be a shock to me if we are seeing a real turnaround in sentiment in terms of investors going back to risk on assets, taking capital out of things like the Swiss and the yen, putting it back into things like the pound, especially after this hawkish cut. Swiss yen might be able to come back up and correct some of this left side. In terms of actually where to, that's a bit frustrating. I was going to say we might see a 50% correction, but we actually already had the 50% correction. So if I was taking a trade on pound switch, which I might do, I'd have to do some research over the weekend to actually plan this trade. But just on face value, stop loss depends how aggressive you want to be. You could have a stop just below the recent lows, or you could have it at the sort of previous low around 1.07. Take profit. You could essentially just trail, almost like Nick does with his trailing stop strategy. Trail the stop up, and then if we get to this point here and we see a bit of a reversal, double top type action, obviously you'll be stopped out for a profit. I think that might be the optimal way to go about this trade, or just have a hard take profit at the previous pre-tariff level is what I'm trying to say. What trades am I in? I'm in a pound dollar short, so I'm fading the Bank of England move. And I'm in a couple of others. I'm in Swiss yen. I'll go over some of my open trades slightly later. We're in the France 40. That's not my trade. Copper's not my trade. Aussie Swiss not my trade. Euro dollar still long. That one's probably going to get stopped out quite soon. And Swiss yen shorts. But like I said, I'll go over those shortly. I'm in dollar Swiss long short term, but I'm worried about X of Trump speaking. It's part of the game, Lewis, or Louis. However you do that one. Unfortunately, every trade you take is at risk of someone doing something or saying something or some headline coming out. It's a risk you've got to take. Obviously, you don't have to take the risk. Actually, I'd probably pull wood in, but you know, if you're going to be a trader, it's a risk you're going to have to take. James, talk about how someone here in the chat is taking out loans to trade. Are they? What? Surely not. I can go into that, sure, but that sounds like a wild thing to do. What do you think about CAD yen? Good question. CAD yen, I actually don't really have anything on it, to be honest, in terms of an idea. So to trade the CAD, you should know, you should have an understanding of oil. I don't have an understanding of oil right now. I've got no idea what the latest news is for oil. I've really got no idea. It's not something I pay much attention to these days. So just looking at the trend of oil, it's very clearly down. So that already puts me as a little bit of a negative taste for the Canadian dollar. The problem is, as I said earlier about Swiss yen, I'm not 100% sure. Didn't take that trade, luckily. I'm not 100% sure I'd really be willing to buy the yen just at this time. Yeah, I'll be honest, there is nothing here. This is just sideways noise. Don't want to buy the CAD, don't want to buy the yen right now either. So yeah, there isn't anything for me there, sorry. Excuse me. Can you look at New Zealand US dollar? Is good trade set up for long? I wouldn't want to go long right now. What was I saying? Yeah, I'm not sure I'd want to go long. And the reason is because I've been saying for a while that I think the dollar crosses a due a pullback. I mean, the aggressive move we've seen over the past couple of weeks here, I really do think we need to see a correction. And obviously the markets don't care what I think or what I want, but it's one of those things. I feel it and I do expect it. As well as the Fed being quite hawkish last night, excuse me, it wouldn't be out of the question. If we can start breaking these lows, I would be taking shorts on dollar crosses to come and start correcting this left side. I'm not sure I'd want to go short on the dollar right now. Obviously, that's what you're doing. If you're buying New Zealand dollar, you are selling off the US dollar. The US dollar, to me, looks very, very good where it is in terms of a technical perspective. We've spoken about it a couple of times. I mean, it depends how if you like trend lines or not. I don't really, but if they fit, I will mark them up just to pay attention to. But we've got a relatively respected double sort of trend line thing here. We've got previous structure at this level that we're seeing rejections at. It's very difficult to bet against the US dollar, especially after it's had a multi-week sell-off. And now we've had 2 weeks of buyers. We've also got leveraged funds buying into the dollar as well. They've had 5 consecutive weeks of buying into US dollar dips. So yeah, I cannot justify selling the dollar right now. Hold on, let me just catch up with the chat. Why do you think the Bank of England was hawkish today? Let me just, actually, that's a good point. Let me just pull up my my notes so I can read it off for you. Give me a second. Here we go. So key points: monetary policy remains restrictive, no present path for rate cuts. Would you consider that dovish? I wouldn't. Bailey emphasizes global unpredictability, justifying gradual policies, and that's dovish, not in a major way, not immediately anyway. Inflation easing, Q3 CPI forecasted towards 3.5, previously 3.75. Yes, but forecasting, I wouldn't say that's a huge deal either right now anyway. Tariff-related drag on global growth acknowledged, but we've actually just had news that the US and the UK have come to a trade agreement, I think, or successful trade talks. So that's also not putting a bearish position on the pound as well at the moment. So there you go. Yeah, when I say hawkish, maybe that is the wrong choice. Maybe not. I would say it was slightly hawkish. I wouldn't say it was super dovish, super hawkish. I'd say, yeah, maybe neutral, leaning towards hawkish. Maybe that was a better way of explaining it. Yes, he was in the stream earlier, James. If it's true, then that's worrying. If anyone's new to trading, never do that. That's the thing, exactly, yeah. The problem is with trading, it's very easy as a new trader to have a lucky winning streak. But because you're new, you don't know any different. You won't know it's luck. You will think you are just very good at trading. So it's very easy to get into that, have a winning streak. Then you take out some money because that winning streak only netted $50. That's not enough. So you take some money, borrow some money off your dad, take a loan, and then your losing streak happens and you're done for. A1 trading a lot active on TikTok. I don't know. I've never seen them on TikTok. I'm not sure. Any thoughts on dollar Swiss? I think dollar Swiss upside, similar idea to what did we speak about earlier? There was another Swiss trade. I can't remember. But yeah, same thing. I wouldn't really want to sell the dollar unless we get some more news that is supportive of shorting. I think I would rather wait for this trend to change, break above, retest into these moving averages, then come higher. At the moment, I am slightly bullish, not in a position where I'm desperately looking to buy, but I am leaning more towards being a buyer than a seller. But this move to the downside, I cannot justify trying to fight it. I need to wait for that trend to change before I do anything. So yeah, that's that. ADJPY. I was looking at the Aussie yen for a long, right here. I think I actually marked this one up on stream. I'm not sure. Maybe I did, maybe I didn't. I can't remember. But yeah, it was a similar idea to what I just said. We were looking to go long. We had the trend change. We had a retest of this level. But this retest was quite aggressive at the time. It wasn't something I wanted to buy into very quickly. You know, I don't like, in situations like this where I want to buy off a previous level, if the market or the candle is coming down aggressively, I don't like to just buy it. I like to wait to see that momentum fade a little bit, maybe go down timeframes onto the H1, see if we can have an H1 bullish candle just to confirm at least we've got some buyers in that market, then I might buy into it. But yeah, this was quite aggressive to the downside, so I kind of just left it and didn't check it. But the trade idea is still valid. I mean, we've not had much of a push off this level just yet. So maybe if we can come back down into these lows, I might reconsider going long. Again, just banking on that possible risk sentiment shift from risk off to risk on. Obviously, we'd see an outflow of yen, inflow into the Australian dollar potentially. So there is an idea there, but not for me right now anyway. I don't like holding trades over weekend of Trump market. Yeah, I've got to say, actually, Bull, it's a risky game to hold trades over the weekend with Trump in office right now. But it's a little bit of fun, you know. You can wake up on a Saturday morning, it's like, oh no, what's going to happen? What's going to happen? You go to bed on a Saturday night, and you're like, oh, what's going to happen? It's like having a little gamble on, a little bet. I don't condone gambling, by the way. Let's see. So UK 100 is coming back down, or FTSE is coming back down to a possible entry point here. If we can, I've got an alert set. So if the alert gets hit, I will maybe take it. I will have to do a little bit of research just on that Bank of England speech, because I was streaming it at the time. I kind of not glazed over, that's probably the wrong word. I kind of skimmed through it. I didn't analyze it fully. So I just need to double check that before I do place a trade on the FTSE, but I quite like it technically. I think it's pretty solid through here. So we'll see. Yeah, gaps are fun, but yeah, gaps can be amazing as long as it's in your direction. Yeah, it is. It's definitely a risky job holding trades right now, but that's what we do. Traders are inherently risk takers, so have fun. Pound dollar, yeah, same idea as New Zealand dollar. I spoke about New Zealand dollar slightly earlier. Well, if the markets are going to start expecting or do expect inflation in the UK to start coming down, that would reinforce rate cuts. So maybe bearish on the pound on that one. We had the Fed come out quite hawkish last night, in my view, so we could quite easily actually see this start getting corrected, I think. Remember, general rule for the markets is they look forwards anywhere between 2 to 4 months, really. So if you're looking, if we've just had Fed and Bank of England come out, so we had Fed last night, we had Bank of England this morning, that's now traders pricing in for the next 2, 3, 4 months of what they expect to happen. Obviously, it changes when data comes out and is released, but we might see pound dollar come down a little bit on that. Obviously not right now. I'm talking over maybe the next couple of weeks, couple of days. We'll see. Yeah, Lee, that's another thing actually. Depending on what you're trading, if you get that spike, you can actually lose a lot more money than you intend to. So let's say you've got a 1% stop. Yeah, let's say hypothetically you enter short here, you've got a 1% stop loss here, and the market opens here with a gap. You're in some trouble there. That's going to be a bit of a nasty closure on your part. That might be like a 2, 3, 4% loss that you didn't account for. Yeah, Monday after a gap is pretty painful. How much percent on average? I'm making 2.7. Oh, I can't remember the final digit. It's around 2.7 on average, give or take. It's around that number. Why do you never show losses on Telegram? Only the wins? I do show losses on Telegram. Scroll up, you'll see it. Also, I actually haven't had any losses in a while, to be honest, Betterment. In fact, you know what? Let me show you something. Just to put you in your place a little bit. Remember who you're talking to. Hold on. Let me just pull it up. There you go. Wait, can you see? Wait, let me. Oh, wait, hold on. There you go. That's there. So just chill. But yeah, I mean, I don't only show wins, I will show losses if we have them. But I'll be perfectly honest, this isn't a marketing thing. We actually don't have that many losses recently. We had one on a stock, but that was 0.6% because we closed out early, but that was it. The past 3-4 weeks have been very, very good. Serving God, you can find it on our website. I'm sure it'll be dropped in the chat at some point, probably when I leave. It's on excuse me, it's on there. Oh, well, there you go. It's in the chat. You can join it there. There's a button. You can join our Telegram for free there. You know what? Okay, fine. Just to clear up that. Okay, account. Let me just wait. Hold on. Let me do this. You saw that change? It's Darwin. So actually, you know what? Technically, yeah, I guess you could consider it a demo. But it's all tracked. It's all legitimate. So there you go. MetaTrader demo doesn't count. Yeah, I know. Trust me, I'd be the first one to call out that. Needs to be regulated broker. I think Darwin is regulated. Okay, right. Let's go back. Let's recalibrate what we're here for. Dow. I'm not really looking to trade the Dow right now. FTSE might be an entry today. Nasdaq maybe. Oh, New Zealand CAD. That was one I wanted to look at. Let's have a look at New Zealand CAD. Here. I can't remember what the other guys were looking at. Yeah, Bull, don't worry. I know. It's all good. Let's see what we've got. So we really want to buy this market because the edge finder's buying. The edge finder's reading bullish. So it makes sense. We've also got high. Excuse me. We've got higher low. We've got the 0.5 and 0.618 level here, bouncing off this 200. Technically, it looks quite nice, but this 50 has also been used as a bit of resistance. We're not seeing much of a follow through to the upside, which is not very convincing, if I'm honest with you. It's kind of giving me the heebie-jeebies. Yeah, I don't know about this one. This is actually a good example of discretion, because if you were doing a rule-based strategy, I guess, just pure logic, mechanical, rule-based, this would be quite an obvious buy. But yeah, it doesn't feel right just yet for me. Maybe we'll come back to that one in a couple of days or next week. What else do we have here? New Zealand yen. Yeah, I think Nick was talking about New Zealand yen. Let's see if we could find an entry or a potential idea here. Bullish H4 trend. So that's quite nice. Trend changed here. We do have this pretty strong fib actually that's been respected and rejected twice. That's quite convincing. The daily is still technically bullish. The monthly is bullish. Daily's bearish. Okay. I'll be honest, actually, I really don't mind New Zealand yen. I may consider taking this one at some point. This might be one for tomorrow. I don't really have any data on the New Zealand dollar at this time. But again, just from a technical view, I think stop loss at the previous low, take profits maybe at the fib extension. Now, the fib take profits a little bit, what's the word? A little bit optimistic at the moment. But the reason I'd be happy to be a bit optimistic is because I'm Swiss yen short. So this would be a really nice hedge just to sort of balance out that yen risk that I've got. So yeah, this might be a play. Be fearful when others are greedy, and greedy when others are fearful. And everyone keeps saying everyone keeps saying AUD USD is going to 0.5 will never happen. We'll see. Let's have a look. Wait, 0.5? What? I'm not saying it's impossible, but I want to know the thought process. Why do you think 0.5? Because don't forget, I think, well, actually, it depends on what you're really looking at. Are you looking at the dollar to get significantly strong, or the Aussie dollar to get significantly weak? What's the driver in the trade is what I'm trying to figure out. Okay. Yeah, I think you may have slightly misunderstood that Warren Buffett quote. I think that's more regarding like risk sentiment and the stock market, not necessarily trading Aussie dollar to fresh lows since 2001. But you do what you want to do. How did UK 100 react to the rate cuts? I'm not sure. Let's see. Yeah, not great. So I can't remember what time the rate cut actually was. Was it? Let me just check. Okay, so it was at 12. Yeah, so initial downside even before the cut happened. So people were anticipating a relatively neutral hawkish tone, I guess. Nasdaq coming down hard. Let's see. Where's my mouse gone? Yeah. It's coming down. I wouldn't consider this a hard drop just yet. Dragon, hello. Trump speech in 10 minutes. Okay. I'm not sure. Like I said earlier, I'm perfectly happy to admit I had no idea this Trump speech was coming. So I have no idea what the topic is. Does anyone know what he's actually, is he meant to talk about something specific or specific? Let me just see if I can find it. President Trump's speech is vital for market sentiment and influences. That doesn't help me too much. I don't know. Does anyone have a quick thing for me? I've been quite unprofessional and not even done any checking on it. It just says President Trump's speech. Got no idea. We'll see. Might see some whipsaws. Who knows? Will you stream the speech? Well, I'm here. I suppose actually, I don't know. It depends. I'm not sure if there's any plan. I don't know if it's even something that we should be paying attention to. I don't know what the topic is. Probably will announce the agreement. Maybe, yeah, we do. Yeah, we did see the Bloomberg headline come in, so it might be that. Yeah, so we'll announce it. Okay. Yeah, we'll see. Again, it could be a whole lot of nothing burger, or it could be, whipsawing, who knows. Nobody knows the UK like I know the UK, yeah. Great. Well, if he knows anything about the UK, he wouldn't have a trade deal with this country. It's falling apart. Just leave it to burn. Okay. Oh, I've not checked gold. Yeah, I don't know. I'm still mixed on gold. It was, let me just double check, because when we take sentiment out of the picture, gold is quite bearish. Well, a score of -3. So it's not something based on economic indicators. It's not something I'd want to buy right now. However, obviously we do have other things like geopolitics. We've got other reasons. We've got central banks buying as well. So while it's not, in my view, it's not a huge long position as it was previously back in these times. It might still be, it might provide something, but I just don't see it continuing to rally until we get the next escalation of whether it be tariffs, whether it be Russia, Ukraine, whether it be India, Pakistan, whether it be the Middle East. There's so many things going on, but right now, seems like everything's priced in. And obviously the hawkish Fed as well wasn't great for gold's idea. So sad British Empire to disaster. Yeah, the UK went from was it absolute domination of the globe to people starving on the streets and old people dying in their homes because our government can't manage people properly. Absolute shambles. It will likely be due to China tariffs. Talks about proper. Okay. Yeah. It's all because of Meghan Markle. Ball out stream entries be rationed. Yeah. You know what they should do? They should have like a ticket system. So you have to pay 99 cents to be able to send a message in the chat. They get rich off ball out and bashy. Right. Okay, let's see. I don't think there's really anything else to cover specifically anyway. Russell's bullish, but the Russell probably isn't the best buy until we get a bit more clarity on the Fed. So it sounds, I wouldn't expect the Fed to cut in the next meeting, especially on the data we've got. It was a unanimous decision, by the way, to hold rates. So I don't see that changing really. Bitcoin's bullish. I think Bitcoin's actually approaching 100K, isn't it? I checked it this morning, but I didn't look too far into it. Yeah, it's not far away. We are pushing it. Yeah, how far? Almost actually. We almost touched 100K again today. So I would consider going long. Now, I always say, my little disclaimer is I don't trade crypto. But just from a technical view, I actually would be very happy to buy. I'd be quite happy to buy Bitcoin here. And again, just a technical idea, and I would only take it back into 100K. I wouldn't be looking for anything beyond that. Yeah, so here, stop loss. This is one of those trades where the stop loss is a little bit tricky because if I put it at the previous low, it gives me a 1-to-1, which is fine. But do I want a 1-to-1? I'm not sure, but I don't think I've got a choice. I think I have to do this. Maybe just take an extra little bit of risk. Maybe use like 1.15 or 1.5% risk on that one. We'll see. You'll pay to support. It's all good. I don't think anyone on the show needs things like that. Josh Worthington. Don't get me started about the UK. I hate the country. Yeah, Josh, it sounds like you sound like a lot of the population. Lee, I agree. The UK is beautiful. Like the scenery, the landscape it's great. But what it's turned into in terms of the government, even to be honest, a large majority of the people, embarrassing. We're full of lazy people. Lazy, uneducated, useless government, failed cities. Shame. Am I going to pull up the Trump speech? You know what? I will try to. I don't know if you guys will even be able to hear it. Let's see. Let's quick check. You guys. Just let me know if you can hear it. We'll put it in the corner and we can just pay attention. Okay, so you can't hear it. Okay, that's fine. Never mind then. We'll scrap the idea. Donald Trump shocking remark on national emergency. It doesn't seem super relevant just yet anyway, so whatever. Whatever happens, happens. You shall update us, OT? Okay, I appreciate it. You can be our Bloomberg terminal for now. Lee, yeah, no, I'm not saying that everyone is lazy and useless. I'm just saying a large portion. I mean, I'm not going to get into politics, but I think the current political situation with the standings should say a significant amount of the mindset and delusion of a large portion of our citizens. Although I suppose we don't really have much of a option, do we? I mean, our governments are very much feathers of the same bird at this point. Okay, right. So what do we have next? We've got the Dow, let me put it on screen. We've got the Dow, the FTSE, Nasdaq, New Zealand CAD, the S&P, New Zealand Yen, DAX. The DAX has done very well recently. We're back to all-time highs in the DAX, which is really surprising. It's recovered very quickly. Actually, let's just see, what is the recovery? Yeah. So from the absolute low, we're back up pretty much to 24.5% in 33 days, which, what is that, like just over 0.5% a day, something like that. I'm not very good at maths, but that's quite an impressive recovery. So yeah, again, similar to the other trade ideas, I'd be happy to buy the DAX on a pullback, possibly if we can come into these moving averages. On the other hand, I don't like that this market gap remains open. Generally, we do see these get filled. I mean, you can see it very quickly. Even here, we've got market gap filled. Here got filled. Here got filled. Here filled. This just got filled here. So it can take a while, but typical behavior, we do see them get filled. So I'm now a little bit torn. Do I want to be aggressive? Do I want to just buy on the next pullback blindly and just ride the wave? Or should I be a little bit more conservative and see if we can come down and fill this gap? I think probably conservative, given the current situation we're in. I think is probably the smartest move. Bloomberg has its own eBay. You know what, Alan? That's really funny you say that. My friend sent me a picture of Bloomberg the other day. Well, I say the other day, it was when tariffs came. I don't know if it was true. I don't have Bloomberg. I'm not sure if this was true. But as soon as tariffs were announced, he sent me this picture, and there was a Patek Philippe, there was Rolexes, there was a Daytona, there was all sorts of luxury watches getting listed on the same day. And he just told me that margin calls are getting hit. I was like, you know what, probably not far off the truth, actually. People's bonuses going out the window on the market crash, people selling all the watches on Bloomberg. Not good at maths, don't say that to your investors. But you know what's funny? I had an investor. I don't have the investor anymore. We cut ties, but pretty much I was just like I am on the streams, and he invested with me, and he didn't care about anything other than the returns and obviously the drawdown. He wanted to see metrics, but what I mean by he didn't care, I mean he didn't care about me. Like he didn't care about my personality, my attitude, or anything. It was so strange. It wasn't a large amount of money, so it might have been that. It was in the tens of thousands, but obviously, in trading, that's not very much money at all. Guys working on Watch Trump on YouTube, just type in Trump speech live. It will come up. Can you say on how to manage capital and still withdrawing profits without ending the capital? Don't, Ismail. Just keep the money in the account. So what you're going to see is exponential growth. So you may, let's just say this is the graph here. Let's say you start obviously 0. Let's say this is, let's say this right here is $100, and then this, let's just say for argument's sake, is 10,000. Obviously, you don't be pedantic. This is 10,000. So if you deposit and compound, your account will look like this. Oops, wait, sorry, wrong line. Like this. So you'll start slow. It might take a while, but eventually you'll get this curve and it will feel quicker as you start taking bigger positions. This is exponential growth. But if you do this and you start withdrawing, it'll look more like this. So you might still compound, but you're doing it much, much slower. So something like that rather than something like that. So while there's nothing necessarily wrong with withdrawing, especially if you're still growing the account, it just gives you unnecessary friction in building up a larger account. I think what you should do is when you are still when you're in the phase of building capital and becoming the trader you want to be, just forget about withdrawals. Forget that button exists. Never click it. Just forget it. Use that trading account like it should be a mix of a savings account, an ISA, high yield account. It should be all of those things in one. So all you do is deposit, you trade, you deposit, you trade, you deposit, you trade. That's it. And then eventually what you'll notice is larger traders, not every single one of them, but a lot of large capital traders will reach a point where they have a baseline. So they will trade something, I don't know, let's say 500,000. So this is what they will start the year with. That's all they've got to trade with. So they might make, maybe 200,000 in terms of profit. They withdraw this at the end of the year. That's what they live on. That's their salary. They start the next year again with 500,000, and that's it. They repeat that cycle. But you will get there a lot slower, significantly slower, if you start trying to withdraw profits too quickly. So I would just completely forget that. Trump's not speaking yet. Okay, fair enough. So we're not missing anything then. OPEC April oil output falls by 30,000. Okay. James, that's why that's too complicated and hard. No one does that way. Just make money and deposit into trading account. Yeah. That was useful. Good. It's one of the problems with traders. They want to, they're too quick to try and turn trading into an income, into a cash flow, and they don't want to do the process of actually building it into significant money. They just want they want the best of both worlds. They want the big capital. They also want the cash flow. To start with, you can't have both. That's just not. You're in a juxtaposition or catch-22 or whatever you want to call it. You have to have the process of just deposit, make money, deposit, make money, deposit, make money, and then eventually you'll get there. But you can't have the best of both worlds straight away, unless you do have large capital to start with. But that's a different story. And I'm assuming the majority of people don't have that. Obviously, there is a. I'm going to backtrack slightly because there is actually one or two extra points there. If you want to get into like the nitty gritty or like the whatever you want to call it, there are times where you should withdraw at certain points, and that's to solidify the idea of money. So what I did, the first time I got to a significant amount of money, I didn't withdraw it to buy Rolex. I didn't do anything flashy. I withdrew just to buy some lunch. And it might sound stupid, but it's to say that lunch actually didn't cost me anything. Sure, obviously the trading account, yeah, but no money left my bank account. I didn't actually, in theory, I didn't feel that money coming from anywhere, if that makes sense. And then it kind of clicks eventually. You do that maybe once a month, just buy yourself a very cheap lunch. And it clicks like, wow, that lunch was just from clicking buy or just from clicking sell. Very simple. But again, the core principle is don't withdraw, especially if it's a big withdrawal, because you are just going to stunt your own growth for no reason. Fastest way to make $1 million is start with 10. Absolutely. You can find the speech on YouTube. Yeah, I mean, that's it. The Fed and Trump speeches are very often quite readily available. You can just type in Trump live on YouTube. It'll be the first one that comes up, more than likely. I just typed in Trump speech live and it came up. So just do the same thing. Anyway. Sorry, guys, 1 second. Fastest way to become a millionaire is start as a billionaire and start trading. Yeah, that's facts. Yeah, I don't know. Okay, I've got a question for you guys. When will you stop trading? And some of you might not, but I plan to stop trading at some point. So I don't actually have a dollar figure, to be quite honest with you, but I don't want to be, 75, 80 still looking at euro dollar, because, I'll probably have a heart attack of stress way before then. So yeah, I plan to stop trading probably either when I get to like, 20, 25 million, or if I get to 55, 60, I think. I do love trading, but it's not something I want to do forever. I'm very much in the idea that trading is a job. It's not a hobby. It's not a passion. It's a job. I learn the job. I do the job. That's it. But, there are other people that really do love trading and want to do it forever. And that's completely fine, but that's not me. I will, at some point, I will retire. You will see the Elite Traders Instagram with a picture of me on the beach with a coconut full of vodka. And then the next story will be someone buying Elite Traders from me. And then you'll never see me again. If you love the market, you trade. I do agree. I mean, like I said, I do love trading, but it's not something I will do forever. I do have a point where I will just call it a day and be like, you know what, made some pretty good money. What's the point? Why go on? For me, trading is, you shouldn't start trading to make the money. I mean, it's probably one of the most dangerous ways to do it. But at the end of the day, trading is to make money. That's the only thing it's good for. It doesn't provide value to society or anything else. So once I've got enough of it, there is no reason to continue. I'm not having children, so I've got no one to pass it to anyway. So I'll make my millions and I'll just do nothing. If you're involved in international trade and business and trading is a must, whether it's in currencies or energy. Yeah, but I think, you are right. But I was talking specifically about, physically, trading, buy and sell on stocks, currencies, whatever. I appreciate the respect to call me master, but please don't call me master. That's putting me on a pedestal that I don't want to be on. I'm just a guy. I'm just like you. Can you explain why euro pound bearish if 0.25 fees, do you think is manipulation? What do you mean 0.25 fees? Do you mean the 25 basis point cut? It's not because of the cut. So what you need to do when you look at a rate decision is not based on, actually, that's not the right pair. What did you say? Euro pound here. Yeah, this isn't based on the cut because people expected the cut. It's what we call priced in. It's expected. So nothing actually happened because of the cut. The reason this is moving down is because of what they said after the cut. They call it the meeting or the statement or the press conference, whatever. They give you what you call forwards guidance. So the markets, as I said earlier, the markets are looking forwards sort of between 2 to 4 months. So this is a very quick masterclass. I've got 1 minute left on the stream. So let's just say, hypothetically, these are the next 2 Bank of England meetings. So we've just had one today. Let me just square that off there. So we've just had this meeting where they came out hawkish, neutral, slightly mixed. So now investors, traders are looking to the next meeting. They're saying, okay, well, they said X, Y, and Z in today's meeting. So by the next meeting, we are expecting them to cut. So the market might go down because we're expecting the cut in the next meeting. Or it might go up because we're expecting the hike in the next meeting. Same thing again, we're expecting another meeting at this point. Based on this meeting speech, we might expect the market to continue down if they're expected to cut here. That's it's a bit of a complex one to try and explain in under a minute, but hopefully that at least gives you an idea of what I'm trying to explain. Okay, there you go. I'd like to make around 30 mil and pull out to invest in something less stressful. Othman, I think that is the best idea, to be perfectly honest with you. Get into something that pays dividends, just live off the dividends. Not financial advice. Isn't Trump supposed to be talking? I don't think he's live, or I don't think he's talking just yet. That's the latest update I heard. I just saw someone say in Trump's speech live, buy BTC, Trump is buying right now on the toilet. Great. He's nowhere near as punctual as JP. Yeah, I know. Jerome Powell is a badass, to be fair. I mean, you know, going head to head with the president, saying that the president has absolutely no effect on the way the Fed behaves or what they do. Respectable. Trump bullies. Well, maybe not bullies. Trump gets his way very frequently. And for Powell to just stand there, cool as a cucumber, and just say, basically, we don't care, is pretty badass, I would say. So fair play to him. Explain GJ. What do you mean explain GJ? Something happened. Let's see. By the way, guys, just a heads up, I am slightly over my times. Actually, let me just quickly check. Who's on? So Chris is on after me. So I might have to shoot off. Tell you what, I'll leave GJ for now because I don't think I've got the time to give you a proper analysis on it. Powell's underrated. He's done a good job. I've got to say, I think, yeah, I would give Powell his flowers. Apparently Chris is running a bit late, but that's no problem. I don't mind hanging out with you guys for a while. I'll babysit. Explain USD like I'm 4. God, you put me on the spot there. Oh, Trump's late. Sorry, not Chris. My bad. I was getting the messages confused. Explain. Okay, I'll do the technicals. So the dollar previously couldn't break above this level. So we've created the roof. We broke out of the roof. Now the dollar is jumping on top of this roof. The next jump may bring the dollar back to the next roof that we created here. So we actually now using the roof that we just jumped on is actually now technically a floor. So there you go. That's your 4-year-old explanation of the dollar. I mean, I wouldn't explain fundamentals to a 4-year-old, so hopefully that will do for you. Well, I'll tell you about USD JPY. Brother, you said all-time highs or 160 or whatever you said. It's not even close. I genuinely think for dollar yen to go back to previous highs at 160, we're going to have to see the Fed hike. I really don't think that it's just going to go back to 160. James, the new ChatGPT. Yeah, no, definitely not. Can't deal with those types of questions. Journal, I'm not purposely ignoring you. I'm waiting for the next guest to arrive, and what I don't want to do is give you a breakdown or something and leave halfway through it. So I will let the next guest, Chris Pulver, might be able to cover it for you, because then you'll have more time to actually give you some value compared to what I've got now. Okay, sweet. Let me just check something. Hold on. See, apparently Trump is running very late, but I think he's done this before. I remember once that we were sat waiting for. Oh, you know what? It's a different situation. I'll tell you a different story. I remember it wasn't that long ago. I think it was probably a couple of weeks ago. I did a live stream trying to stream the Trump speech, and it turns out we were waiting for about an hour. Me and the audience. I think there was about 40 of us just sat waiting. And it turns out I was an hour late. So he already did the speech, and I didn't realize. And I was sat waiting, and we were like, "He's an hour late. He's an hour late." And then I realized that it was me that was an hour late. So I wasted everyone's time for an hour. That was probably the most failed live stream I've done so far to date. Isn't the speech in his home? I'm not sure. Oh, World Trades, you remember that one? Yeah, my bad. I apologize for wasting your time. Good times. Lee, yeah, I know. Let's hope not. We've had enough turmoil and uncertainty in the market, so we still do. Last thing we need is another event like that. Yeah, we did have a nice chat. That was good. That was true. It's like a candlelit dinner, because I'm fairly sure I was having a steak at the same time. That's why I didn't really notice that we were actually an hour late. What do you think of NASDAQ? Okay, quickly, Edgefinder is bullish on NASDAQ. However, I'm unsure because tariffs are still a bit of a problem. We don't really have much clarity on it in terms of, to warrant it going back to all-time highs at least. And the Fed was quite hawkish. Excuse me. So if the Fed's not got any room to cut rates and tariffs are still a big question mark, I don't see it really being warranted to continue higher. Anyway, guys, Chris Pulver is here to take over the show. Don't leave when I leave. Guys, have a good one. Thank you for being here as always. I appreciate all of you. Have a great day. Don't get margin called. We'll speak very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody. Happy Thursday. Welcome back. So it's been about 50 minutes into the open. Supposed to have this big announcement from Donald Trump with the US, UK, some trade deal. Like, we're going to celebrate one trade deal. Cool. Markets haven't done anything yet. So I usually sell some premium in the morning on the SPX, but because Trump was on the calendar at 10 o'clock, I was thinking there's going to be some direction. There hasn't been yet, but I wouldn't put it past the market to have some type of surge one way or the other. So what I did put on this morning is a butterfly spread here and a butterfly spread here. So if price gets up into 570 or price fails and drops into the 555 or 550 zone, this one is offering up like a 30 to 1, not an exaggeration. This one's offering up like a 9 to 1. I'm just looking for anything to offer up. If I get a 3 to 1, 4 to 1, I pay for both trades. So I'm just going to wait. If this level gets checked today or this area gets checked today, then hopefully carve out a little bit of a winner, but we'll see. Yep. I mean, I've seen Bank of Canada all morning talking about mortgages, talking about financial stress, US-Iran relations. I'm looking at real-time news right now. U.S. House Republican want to add a $60 billion farm bill package to Trump mega bill. Is this the big bad announcement this week? I don't know what it is, right? There's this, might not be trade related. It's going to be a big announcement. Wait for it. I'll tell you when. Well, I thought it was the AI chip thing yesterday. Maybe it's UK trade deal today. Maybe it's this mega bill with tax proposals by July. I have no idea. So maybe he has a sweet meme coin that we could all get into a pump and up again. So what I am seeing, though, is I am seeing this 570 level climb a little bit in liquidity. So I think this is directionally a play for the day. We are getting it's not really a breakout, though. I mean, I've got the call side just barely above the put side, but 570 is growing in real time. So that's what I'm trading. I mean, directionally, now that we have the Fed out of the way, I'm thinking there's some flows. Maybe we try to push up towards highs on Thursday, Friday. Earnings have been interesting. I've got a handful of earnings trades that are still running. I closed out one this morning for a win. I've got a bunch of other ones that are just, I'm hoping they, either have a push today or tomorrow before expiration, and we'll keep an eye on things. So I actually wanted to have a discussion today on, I did some math yesterday comparing just a very simple covered call on the SPY, the Qs, and the IWM. Now, I don't personally love the IWM. I really don't, because I think that small caps are going to continue to struggle, especially until the Fed cuts. I do think that small caps will have a really nice comeback when it's, I think, rates do come down. So maybe it's July onwards. But here's my thought. If we're going to see the Russell fall 15%, I at least have to have a hedge trade for that. But if you do a 1 week at the money covered call on IWM, meaning I buy the shares at $200 or $199.20, and I sell an at the money covered call. If I did this basically week to week to week, if I let's say I buy it at $199.26 and it goes up higher, well, I'm going to roll it. If it's above my strike, I'm going to roll it. And the next week, if it was above it, I'm going to roll it. And the next week, I'm going to roll it. So I would continue to collect as much income out of this as I can. Obviously, I'm sacrificing upside if I'm trading at the money covered calls, but you get about a 1.8% yield on this per week, which isn't bad. So if I have a hedge trade to the downside to protect, so this would probably have to offer like a 3-to-1 or a 5-to-1 to help offset some of my costs. But week to week, I thought this one actually has the better yield of the three. It's also cheaper. IWM at 199 is a lot cheaper than trading Qs at 486 or SPY at 560. As far as cash that I would have to allocate, it's going to set me back a little bit less. But like I said, I don't love it. So there's obviously risk in it. But what I'm going to first check out is if I were to do some type of hedge trade down here towards these lows, like a 175. Let me see what this is going to look like. So if I went out on IWM, number one, let me see what I can get for a trade going into tomorrow. And at the money, I get about $1 out of it. Flip this around. So I get about $1.63 if I sell an at the money, get about $1.11 if it gets up to $200. I would still want to roll that out to tomorrow. But if I go out to the next week, so out to the 16th, I'm getting about 338 or 285. If I want to play just slightly, at the money, I get 340, which isn't terrible. I just want to have a hedge trade that is going to pay pretty well. So hedge trade for me is probably going to be a September trade. If I want to time it a little bit less, let me see, September. That's still way out there. What's a September, like 170 something? Yeah, that's still $9. Yuck. I almost want to use the futures market. Let me go. So I could do Russell. So RTY. Go to September. Check my RTY feed here. So if we're back down towards like 1700. I mean, that's not bad. Okay, so that offers up like 9-to-1 reward to risk. So it's not a bad hedge. I wouldn't necessarily be able to get the full like $4,500, but I could probably turn $500 into, $500. I could turn $500 into $1,000, take a fraction of that profit, even if I'm not right in the timing of this, but at least would make me feel a little bit better about downside protection. So the reason I'm talking about this is I'm going to buy some shares of IWM, and I'm going to build this kind of small caps campaign, which is if price goes higher, that's fine. Obviously I get a little more confident if we are going higher, that we can just, see some recovery on small caps. I mean, this was down about 30% from peak to trough. I think in this area, it's like we may not come back down to the lows, but we also may not get up to crazy all-time highs. We might just be in this kind of choppy, no man's land. So selling covered calls to me about $3 a week generates some pretty solid income. And as long as they have downside protection, I'll just keep selling. So anyway, just talking out loud, but I was thinking, what am I going to do with the cash that I've had over the last couple of weeks when I've taken a bunch of profit and I went from about $1 million in cash now to about 1.8 million in cash, rather than parking that in, BIL, which is a short-term treasury mix making about 4.1 to 4.3% unallocated. I'm going to try to generate some yield. So if I could do, like I said, about 1.5, 1.8% a week, that's pretty good. Now, I mean, it doesn't help me to the downside. It doesn't help me to the upside, but it's not about the price appreciation. It's about the income. Generate the income. So if I start the campaign, the goal is I'm going to roll it. If I put it in pulver alerts, it's going to be like I'm going to just do a lot of replies to it. It's going to be just constant updates on my break evens. If I'm rolling or getting it called away and then reestablishing new positions. So if you're interested in that, that's what it's going to look like. You'll see the IWM. You'll see the start of the trade of like where I bought it, where I sold the call, what the credit is, what the break even is, and it's just going to be like math updates every few days, every week. But to me, I'm looking at this environment as I've got to find ways to generate some income. As long as I have downside protection, then I'm going to be a little bit more aggressive. If the price goes up, that's okay. But I don't think the Russell is going to make this screaming move to the upside without having rates go down. So at least for now until July, it probably gives me, I would say, 4 weeks, 4 to 7 weeks, 4 to 8 weeks until the market has some clarity on trade war stuff, right? I mean, today we're supposedly inking a deal with the US or the UK. I mean, price isn't showing any type of signs of moving. It's still really slow, really quiet. Maybe we leak up to 570 today on the SPY, maybe this 5700 handle or so on SPX. Lee says, air traffic problems caused by Biden, according to his Truth Social. Yeah, maybe it is. Yep. Nothing's Trump's fault, man. It's funny. Like the guy, I mean, he's never done anything wrong. Everything he does is always right. It's amazing. I'd love to be that person. I mean, look, if you want to read a good book, go read Commander in Chief by Rick Riley. It's a sports book. It's about look, golf will teach you a lot about somebody, and you read that book, you learn a lot about Donald Trump. So it's hard for me to get that opinion out of my head when I've read multiple books with multiple experiences with this guy over a 20-year period, and now he's a president. He's not going to change. So it's all about we're look, it's Trump's world, we're just living in it. There you go, Lee. So all right, let's see what happens today. We're getting up to 570. Possibly, I'd say that would be my level on the SPY that I'm watching for. So SPY at 570. I do want to set a chart alarm because I do have a butterfly spread there. So 570. If we get up there, and then if we fail, we go down to like 555. We got a butterfly down there as well. If there's a big nothing burger and nothing's really happening, so be it. Okay, so here's what I'm going to do. I'm going to start this campaign on IWM. Start getting this tracked out. And if you'd like to, take the crazy train with me, you're more than welcome to, but I'm using it as a chance to go generate some income. So basically this is an IWM covered call campaign, which I'm just trying to use the IWM and its premiums in order to generate income every single week. I probably have to put on like a futures related hedge just to help me to protect the downside. So I don't have to worry about the timing per se, but if we drop, 200-300 points, I want to have some type of ability to turn, some reward and offset the potential drawdown of an IWM that could go down, 10 to 15% to revisit lows. Okay. So first and foremost, let me start with IWM. So let me buy some shares of IWM. So go to the ask price. I'm going to buy 100 shares, 199.83. Okay, trade is in. Trade is in. Trade is in. Trade is in. And 9072. Trade is in. Okay, keep going. I've got a couple more accounts to get this into. I'm gonna buy the shares first. And okay. 6761. Let's see here. Okay, so still working through it. There we go. Okay. And last account here. Okay, so every account that I'm clicking on here should have some Russell. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so average price 199.84, 85, 85. I'm taking the highest one. 199.85 is my highest price. So that's going to be my highest break even. So buy at 199.85. Okay, now I need to sell. Let's see if I can sell. I'm going to go out to next Friday and sell the 199. That'd be an in the money. I get a little bit of extra value to that. So that would put me around a break even of 20. It'd be 202.40, 202.48. Price is trading at 199.55. Let's see if this hangs in there. So I'm going to put in this trade here. So let me write these. These all have to be written down. So we're going. So IWM. So 6830 9732. And okay, so all the accounts right there. Now I'm going to start adding some covered calls. So I'm going to go out to, let's go 200. So it's trading at 199.52. I'm going to go out to $200, try to collect about 290 on this trade. So I'm going to sell this. So one contract I'm going to sell. These are all 100 shares. So trade the 200, get filled here for 291. Come on, man. 289. All right, 290 just got filled. All right, getting filled at 290. Okay. Come on. So prices moved about 5 cents lower. 25 cents lower. Wow. All right, let's try to get a 280, 281. I'll take the lowest credit here. Fill the 285. That's not bad. Okay. So 199.85 is my buy trade. Let me look at the lowest fill. Added a 516 expiration. 200 sell call. Lowest credit fill 290. Lowest credit fill was 285. All right, so that gives me a break even. 199.85 minus 2.85. Break even is 197. That worked out pretty well, actually. 197 break even. We're trading at 199.38. If it's higher going into next week, I'm going to roll it. So my goal is just to keep rolling as much as I can. I'll figure out how I want to hedge this to have some downside protection. But that's it. So campaign has officially begun, and I'll get this added into Pulver Alerts. So this is going to be under my index trades, and I'll list this one as a campaign trade. So IWM covered call campaign trade. So buy 100 shares at 199. What was my highest price? 85. Adding a 516 expiration, 200 sell call for 285 credit. New break-even price is 197. Goal is to add, roll a covered call to these own shares weekly. I don't want the shares to be called away. Any rolls, I want to roll for credit by rolling out in time. This campaign will have many updates in the coming weeks. Okay. So if you want to take the campaign trail with me, that's what's going on. Okay. All right. So got that in. I will look at a hedge trade and I'll add that to it. I think the hedge trade will probably be in the futures market, so it costs me very little in order to protect. That way, if IWM is going to make a drop, I want to make sure that if we're going to fall, that anything down to this level, $500 of risk would take me. I mean, as far as income goes, it'd probably take me 2 to 3 weeks to generate the income to cover the cost of that and finance that debit, right? But that's okay, because if it's there for now until, let's say, September, I mean, I'm totally fine with that timeline. I can sell a lot of premium, roll a lot of covered calls, and cover that within maybe 3 to 4 weeks. And then after that, it should be okay. It's there sitting for protection if I need it. If price goes higher, I'm just going to keep, rolling and rolling, trying to pull some credit in. If it gets tiring and exhausting, I mean, I'm doing this on 11 accounts, so if it gets a little exhausting, then I can stop at some point. But the net idea would be trying to generate a couple $1,000s in income. if not more, but just depends on how much effort has to go into this this whole campaign. Okay, so if I'm going into a hedge trade, I'm probably going to look at I would think a Russell's trade or a futures trade. So using RTY, there's mini Russells or the micro Russells, but I'm probably just going to use the minis. It's not that expensive. If I want to do the MK, let me see if I can get an M2K. Go M2. Yep. So I can do micro Russells here. No options available. Well, that's not cool. No options available. Come on. So it's got to be RTY. So RTY, December hedge, 17. Yeah, it just costs a little bit more. Maybe I go way out of the money. Like that's not a bad trade. You know, risk $500, potential profit of $15K, $14,500. It's not about turning it into $14,500. It's about having price. If I need it, price drops. All these deltas change. Like if we get down to 1700, this 6 delta is going to become like a 15 or 20 delta. Well, that should increase my value of this put spread. So I pay, you know, max risk of $490. I like this trade. This is going to be a 12/19 expiration, 1400 by 1100. $490 max risk for a 14,500 max reward. And even if I just make, even if the 490 risk becomes a $500 to $1,000 profit, that's enough to offset my shares by, if I make $500 on the trade, that offsets my shares by $5. If I make $1,000 on the trade, on this trade, it offsets my shares by $10, right? Does that make sense? So whatever I can do to hedge to lower my cost basis on the downside, I'm just going to keep selling premium on the other side. And then the result is I don't really want to lose on a debit on a hedge. I want to finance that. But in order to do that, I'm just going to sell a bunch of covered calls. But it's going to be something I actively have to look at every week. Okay, so this is not a bad trade. Hopefully I can take this in everyone's account. So I should be able to. Buy power is pretty cheap on this one. So 980 debit. See if I can get this trade filled. That's an AM expiration. I mean, it's okay. So let's go here. So pending at 980. Once I get this filled, come on, man. There we go. Let's try to replace this 980, 990. I don't want this costing too much more than $500. Really? All right, I'll go 10 cents more. It's cost me $510. All right, that filled. All right, that's fine. So max risk $500, $510. So let's get through everyone's accounts here. 3, 4, here, 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 and here. Should be 11. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep. So that filled. That filled. All right, good. These hedges are all filled now. I'm going to get these all taken care of. So I should have 11 of these filled when I'm all done. Okay. Got 2 more to fill, I believe. And last one. Okay, this should be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so I'm hedged. Let me add to this in the pulver alerts. Edit message. Also adding a downside hedge with high reward to risk. This is RTY, so Russell Futures, 12/19 expiration, buy the 1400 put, sell the 1100 put, 10/10 debit, max risk about $510, max reward $14,510. Unlikely to get $14,510, but to turn that into, I mean, what's the math on that? So 14,510 divided by 510, you're looking at about a 28 to 1 if it's there. So turning that into a 2 to 1, 3 to 1, 4 to 1 is higher probability. So realistically, for every $1,000 that I can make in that trade, even $500 I can make in that trade, that's lowering my IWM cost basis by $5. Does that make sense? So that's the plan. If I lower my cost basis, I mean, I'm just going to play in the game, sell a lot of premium. I've got the hedge set that's out in the distance. I don't have to worry about the timeline on that necessarily. Now I just focus on every week selling premium. And the reason I'm doing that is because if we're going into a choppy market, right? If the market's sideways, struggling to go higher, not really going too much lower, the best thing I can do is just collect income, collect premium. I'm not super bullish on anything right now. I mean, I think we still have to wait and see what gold does. I think we still have to wait and see if the futures or the Forex market is going to make any big moves. Mag 7 is still pretty quiet. Like liquidity, volume, volatility has all changed a lot these last couple weeks. This melt up has kind of caused the market to. It just seems like a lot of money sitting on the sidelines. I know that always seems to be the case, but I just don't know where big money is going. So I think there's the wait and see. It might be a wait and see until July. It might be a wait and see until the Fed starts to cut rates. But if I'm going to position for it in 8 weeks and I can generate income on it, I'm going to. Okay, so that's the plan, and that is now updated. Yep. All right, so I'll add that in here too. Added hedge on RTY. It's a 12/19 expiration. Buy 1400 put, sell 1100 put, 10/10 debit for 510 max risk. There we go. And I mean, cash wise, it's like I used up maybe 200 grand in cash. That's the other reason I chose to use the IWM is I personally don't love the IWM. If I was going to be a longer term investor, I'd rather trade SPY or Qs. But IWM, the premiums are still decent. It's way cheaper. I mean, it's more than, what is it, a third of the price of the S&P, roughly, and like it's just way cheaper. So it doesn't tie up as much cash. Premiums are still pretty decent. Okay, so there's that. So now I watch. That's out to next week. Are we, trading below $200? If so, I'll pull as much out of that as I can, and I'll roll and I'll roll and I'll roll and I'll keep generating income. That's the plan. Trump's on now. All right, well, buckle up, I guess. So I've got chart alarm set 570, 550. Is Trump going to say something the market wants to hear? Is it going to be disappointed if we priced in trade deals? If we not, I have no idea. Here's your price action. Currency strength on the morning. Japanese yen is weaker, pound is up, dollar's getting a little bit of a bid here if this starts to scream up in the next 5 or 10 minutes. Otherwise, we'll see. Japanese yen a little bit softer. Volatility on the currencies are still pretty light, 50 and 60 on the vertical axis. So no major standouts here. So my 570 liquidity level is still valid. My 550 liquidity level is changing, but still kind of standing out a little bit. So 570, 550. I mean, price doesn't have to go to either one of them today. It could just be no man's land. Okay. But if you write these levels down, it's like, I think we're going to make some directional play towards them, whether it's today or tomorrow. Okay. How did our little SPX trade? It had, an hour plus into trading. What the heck did it do today? All right. This is nuts, man. If it's still trading for like 2, it had to have been better. I don't know. This is the trade I was looking at this morning, and it's kind of moving around a little bit, but maybe not. It was weird. It was a weird morning. I usually just sell premium and don't even look back, but because Trump was on the calendar at 10 o'clock, I held off, and we watched this thing for 30, almost 40 minutes, 45 minutes, and it didn't really offer any premium. Like, meaning this, if you sell premium, time works in your favor, and it's as if there was no time decay this morning. So it's still, price is moving a little bit. Give me 1 second. Okay. Any breaking news? What's going on? In the old real-time news. Here we go. Trump. This is a very special day. Tremendous deal for both nations. Oh, man. Anybody can do an impression of this guy. Just speak superlatives and hyperbole. Rare earth deal with Ukraine. Speaking to Zelensky. Reached a breakthrough deal with the UK. Oh, my God. The final details will be written up in the coming weeks. It's not even done. U.S. Chemicals Machinery, meetings planned. We have many meetings planned. Every nation wants a deal. We've got BESENT meeting with China. UK into the economic security alignment with the U.S. UK work together on steel. All right. It will boost trade and create jobs. Will it? This UK Prime Minister. That's what it says. So are they together? Are they speaking together live? Like sitting in the same room? Anyway. All right. Look, let's watch the price. I've got chart alarm set. I'm going to do some other analysis. So let's go top down. I don't think anyone's going to be surprised to see the market pull back a little bit. If we do go up a little bit higher, I think they're still running into some heavy resistance. So, as I mentioned here over the phone, okay. It's actually just somebody that's impersonating the UK. We're just faking this whole thing in the US. Anyway, these are the levels I'm watching. In case we have pullbacks, these would be the levels I would see some structure support. A very tiny pullback right in there. The low we had on that Monday and a gap fill. If we get a little bit nastier, then obviously a gap fill. So I think that all these are pretty well supported. Truthfully, I think these are pretty well supported. This area with a previous low, I could see this 5,500 zone being pretty well supported. If we fall deeper, it would be somewhere between like 54 and 50, probably 54 to 5,300, just because that's a really obvious gap. But on the right side of this trend line, okay, now that we are on the right-hand side of the trend line, any real pullback here that doesn't look like we're just revisiting the same drama we had back in April would be an opportunity to look to go long. I do want to position long in these markets, unless price tells me otherwise. But I think just this is probably the most noisy zone right here. It's just very noisy, lots of chop, and I'm going to do my best to sell a bunch of premium. Okay. Qs. Same thing on the Qs. Where would I look for pullbacks? We pull back into 470, pull back into like 450. If it gets a little bit more volatile, 440. But to me, these are all areas where I'm liking the potential bottom and see if this is going to be a swing trade, right? We are at this high, Is this a neckline? So as I said, I'm kind of warning traders, like, don't guess that this is a bottom. Okay. But with defined risk, I don't mind taking a small stab at it, doing an option trade. If I'm right, I get rewarded there, and then I can position for this neckline break, and we can actually have more of a directional play where I don't look. This is not a spot that I want to sell premium, right? This is a spot that I want to be riding long side. I want to ride debit spreads. I want to ride call options. That's where I want to be taking advantage of that profit. So I can take some bites here with defined risk, and then if we get a nice directional play, then we can leverage up a little bit, and I can sell credit spreads along the way. I can buy debit spreads along the way, and have a directional play. So some key levels there to watch. We're sitting right back to the 200 moving average. The Dow, kind of the same thing, very choppy. Maybe the Dow gets back into the 200 moving average. Oh, you know what? I did have a trade. I want to take profit today on Tesla. We're trading at 281. I rolled calls this week. I updated that in Pulver Alerts. I do have a 111 trade on Tesla that I need to close out. And also, I wanted to look at a trade on UNH today for United Health Group. I found a trade yesterday. It's like $600 or $700 of income for a stock that I would say I'm willing to own it. So let me go to Tesla. Tesla's here. All of my 111 trades. So this trade is up about 95% profit. I'm going to go ahead and try to take this. So I've got max profit at 284. I'm up $271. Trade this for 13 cents debit. Hopefully this will close. 13 cents not filling. Let's go 14 cents. Filled at 14 cents. So closing that one down. So Tesla is a 284. Close for 14 cents. Tesla here. Close for 14 cents. Good. Tesla here. Closing for 14 cents. Good. Then I have covered calls. I've got hedges out to July if needed. I've got bull put spreads 190 by 130, which I would take some ownership of Tesla. That's fine. And then a naked put, that's a leap. That's still down quite a bit because that volatility is swell, but waiting. So anyway, 111s are closing. This one, same thing. Yep. So this one should be trading for about 14 cents. So close this down. That's 4 trades. Good. So 4 winners there. 284 times 4. This should be a decent chunk. Yeah, 1136 in profit. Not bad. And then I have if price drops, I've got an out of the money put just in case. It's pretty cheap. I'm rolling my calls to generate the income. I pulled in $3 and I think $3.85 this week by rolling out to May 16th. So there's that one. And then I want to look at a new trade on UNH, which is trading at 388. Yep, and we're still going lower. So UNH, this is a bit of a risky trade, but I've got the cash to take the shares. What I was looking at on UNH was, where did I write this all down yesterday? I think I looked at the trade going out to the end of the year. It was either December or January. But zoom out to the weekly. This level around 290. So if we were to fall, this stock would be down about 54%. I thought I wrote down the strikes yesterday. Maybe I did. Looking. Okay. Oh well, I'll build it again. So I was looking at a ratio spread. I think it was the 290. Let me just play around with some of the numbers here. So going out to January, 270 by 260. Yep, this is about it. So a 270 by 260 ratio spread. I do have risk in the trade. It would tie up some cash, but getting $600. I know it's kind of out to the end of the year, but it's an income trade. Probability of profit's pretty high. If I want to collect a little bit more income, I can do about a 90% chance of profit, collect another $100 on the income side. The ownership is what I'm kind of interested in. So to me, it's not a big deal. Like 270, here'd be the ownership price. If I took assignment, which means price has to drop all the way to 270, 270 minus 10 minus 744, I would own shares at 252. So 252 from the all-time highs it'd be a 60% decline. I mean, are we coming back to COVID lows? Maybe, but unlikely. So I think to be safe, I'll take this trade here. Get over $600. Probability of profit's pretty high. If volatility, decreases on UNH and we start to bottom out and go back up, the trade is really this. If price goes up on UNH, so we go from this just like death drop up to let's say 440 or so, or we just pull back, let's just take a fib. So this is one giant wave and we pull back, let's say 23 to 38%. Then that $6.18 is probably going to be trading for, let's say 350 or less. I mean, if I see like 50 to 60% of max profit, I'll just take the profit and move on. Okay. So the income trade is if I can put in a trade for $6 and change, walk away with $300 to $400 without having to wait all the way to expiration. That trade to me is fine. I am also willing to own the shares. If I had to own the shares, I would own the shares. This would be an ownership of, it'd be 260 minus 10 minus 6.15. I'd still own the shares at 243, which is pretty cheap. So I'm going to take this trade. This is going to be for my PM accounts. See if I get 615 out of this trade. $622 got filled. Good. $621 got filled. $620 got filled. Good. And this one here. Okay. So trade is in. So UNH, it's a 116 expiration. Buy the 270 put. Excuse me. Sell the 260 put with 2 contracts, and that's $6.20 credit. So the way that trade looks, if I wanted to build that out, let me go option strat. Okay, so here's the trade. I'm going to go out to January. This is the expiration. I would remove. Just going to focus on the puts. So that's a sell put. Here's a buy put. There. So I have the buy put and I have the sell put. I'm going to increase this quantity to a -2. And we're going all the way down here to 260. and a 270. There. So if I have a -2, I'm trying to separate these two. What the heck? I want the quantity to change, guys. Weird. Oh yeah, there you go, unlink. So now there's a ratio spread. So if I sell 2, buy 1, this is what the trade looks like. That's not right. Build this out a different way. Just watching price on this side. Give me a second to build this trade out. So this will be UNH. Option leg. January. Puts. So buy 1 and sell 2. And this would be the 260 and the 270. There. So I'm buying the 270 with 1 contract, selling 2 with the 260. That's what a ratio spread looks like. So if price stays here, if price just hangs out here, that's the income that just time works in my favor, and I collect hopefully a percentage of that. That'll be pretty straightforward. If price falls lower, that's okay. I do have a profit trap in a $10 area. The most I can make on this trade would be if for some reason towards January of 2026, price is trading around 260. If it's 260, I'd say greater than 260, but less than 270, then we're in this profit trap. So I can make a little bit more money than that. That would give me a max profit of $1,000 on the profit trap plus the 620 that I pulled in on the credit. So max profit on the trade is $1,600, but more than likely it's going to stay somewhere in here, and I'll just make off the credit that I pulled in. I'll make a portion of that and close it out for some income. Okay, so that's what the ratio spread is going to look like. That's the trade. We go. So what's interesting about this, now that I'm seeing this, is according to this right now with the current implied volatility, the 1 standard deviation move is way out here to way up here. Now, having UNH drop as fast as it did, I mean, I don't think that the IV is going to stay this high, especially for basically a healthcare insurance company. I don't think it's going to stay that high forever. So if the bottom starts to slow and we start to retrace, then this standard deviation will probably shrink in, and this trade will look a little bit, better for the probability side. But UNH has essentially been a cliff to the downside for the last month. There's your stock. I mean, this thing just in a weekly chart in 1, 2, 3 weeks in a row, this thing has just been blasted lower. And it's okay. I'm trying to take advantage of hopefully a simple income trade. It does take some capital to take it. So if it's a little bit too capital intense for you, then obviously don't take the trade. Sell 2, buy 1. I don't know why it's showing up weird on my screen for that option strap build. Should be more of like that, the kind of the peak. There's a profit peak and a ratio spread. Anyway, IV 38.9. Huh. Yeah, that's really weird. Anyway, I built it out. It's fine. So I'm in. That trade's in. I'll get that posted as well. And I've got a screenshot. Or I did. I will have one. Take the screenshot right here. There's the trade. Okay. Let's keep going. Anything happening in currency land? Pound got higher on the day. Japanese yen still weaker. We're making our way through some stocks. Let's go gold. Let's go dollar, oil, gold, silver. Dollar pulling back. Okay. Still, if you are, dollar crazy out there in Forex land, I still think the dollar has pullback potential. Wait for a trend line to break, kind of one trade to a retest of the highs. As long as we don't really do too much damage on the right side of the trend line, I think the dollar is still something to short. But don't force trades. I mean, if you're dollar cost averaging, that's fine. If you're trying to short the dollar here, you want to short the dollar here, like that's okay. But I don't like this trade on the right-hand side of this trend line. If we break this trend line, I wouldn't want to be forcing short trades on the dollar. This could end up being just a big bear trap as well. Nobody knows. I mean, is the dollar truly going to be going to fresh lows? I mean, maybe, but what if this is just a multi-year range and all this did was test the same lows and it just got a little bit more violent because obviously prices were crazy and I mean, perhaps it comes back in here and then stays, and that's the low, and all of a sudden we break the trend line. And then everyone that wants to short the dollar is going to get squeezed the other way because this is now a range trade the other way. And we're none the wiser. This is just a noisy top and a noisy bottom, and it's still a range trade. Just don't force trades without confirmation and have an exit plan. I think if you're short the dollar, and I said, for the last couple of weeks, a pullback towards this 200 moving average is a good spot. A trend line here is a good spot. Don't force a trade. There's still plenty of room for the dollar to retrace into this area. So if you're long the dollar right now, dollar pulling back to here, if you got long on a bullish pattern, long on pullbacks, I mean, there's all sorts of scenarios. You're either long or short. If I wanted to get short the dollar, it would be a rejection off this 200 moving average, a trend line break, and see if we revisit lows with some push. If we don't, I expect this to still be pulling back into here. Maybe that's where the next phase of the dollar is. But I would not be holding dollar shorts if we're going to break this trend line above 102. Okay, it says dollar oil, 59. I bailed on my CL trade. I've got nothing in oil right now. Probably as low as holding for right at this moment. That's fine. I'm still long UNG. I actually need to sell on my diagonal spread. I need to sell into the leg. I'm long at $5, and I sold at 23. That expired in April, so I need to sell another call. Probably lower the cost basis a little bit more. I'm going to make sure I do that today. So let me sell some UNH or UNG. UNH is new, and I need to sell call. Gold, 33.59. This is why I didn't take the bait on buying gold. I think it's still choppy. I think it's still potentially consolidating. I still like gold to get some dips and pullbacks. Silver, same thing, pretty choppy. I'm happy to buy more silver in 29 to 26. Bitcoin is Bitcoin making a run. Okay. Well, not going to complain about that. So it looks like my, thoughts of a pullback not happening, a pullback not really happening, a pullback. I mean, this isn't a fib to me. So I'm going to go ahead and just delete the fib. And I still think there is that potential for a range trade, but we won't know that until we potentially hit resistance. I mean, if you bought Bitcoin down here and you're trading it, that's a great spot for profit, right? Don't be surprised if we do hit resistance and we come back down to lows again, and this is just a larger accumulation. I still like Bitcoin. I think if we surprise to the highs, that's great. It's fine. Bulls are running with it. I think Bitcoin would again like cement its little reputation as being a major diversifier and a major alternative play, like against the dollar, against the fiat system, against, I mean, the old guard. I guess that's kind of what Bitcoin is going against the grain for. But it'd be a nice surprise to have this thing go into all-time highs. If there's risk appetite, let's see what the markets do too. But so far, Bitcoin is behaving pretty nicely. And here you go. Here's some Trump stuff. Very close on numerous deals. We don't know what. We don't know who. So as he probably exactly how he wants it is all eyes on me, and I'll tell you when I want to. And the world hangs in his every tweet and press conference, headline, whatever. Anyway, Bitcoin looks good. IBIT still looks good. I've got some covered calls in this one that I will also intend to roll. I don't want to get rid of this. So IBIT for the shares that I own, which it's quite a few. Let me go. So IBIT is up about $49,000. I've got May 16th. This is next week, $62. I don't think we're going to make a run to $62. So I've got some covered calls. Let me update this one too. So a covered call. Covered call. So this is next Friday. I mean, I don't think it's going to get called away. Let me check the option chain. So $62 is trading like a 10 delta. More than likely, this is not going to get called away, which is fine. And then for that upside appreciation, I don't know if I'm going to keep selling calls or if I'm going to just kind of ride this out. This is one. I mean, we know the volatility of Bitcoin. If it's going to go higher and it's going to run and there's momentum behind it, I don't want to cap the price appreciation. Okay. So this one could just be a joy to have some of these income trades play out and have, the shares run and get some price appreciation and see this number swell. MicroStrategy, let me check in this one. This one's creeping up to some fresh highs. I have some bull call spreads in this one that are now up. Bull call spreads up about $325. Come on, man. I mean, it's out to January, but we're making a nice surge above 390. So I may close this one down a little bit earlier. If I'm seeing like $500 of profit, $600 of profit, then I'll probably close this. And I also have some covered calls in June. 310. I also might still roll this by another week or so. If we're way above 310 on MicroStrategy, I'm going to roll it a week and see if I can get, $3, $4, $5 income and collect this all the way until like June is like my big question mark. If June trade war, maybe I don't know. I'm trying to be prepared both ways, but obviously if the US is inking all these deals, the markets are going to run fine. It'll be fine. But if we come into July and we're like, well, we're still working on this, if all this talk is like the US has done very little. We've inked deals with like 2 countries, I don't know if the market takes that as like this is all just a bunch of crap. So I'm pretty bullish, at least for like a income generating window on like this is a way in the money call, right? We're trading at $400. I'm $100 in the money. So I'm capping my upside, but my break even is down to 254. I can still sell a call, but I don't want to do it until we get closer to expiration. So that way it's like I've pulled out everything I can out of this one. I don't want to go out too much farther for like, I'll see. Let me see what one more week is. If I just close this trade, I don't know why it won't let me just, there we go. So let me try just this trade here. So if I roll this, because I can't even get a strike for it. That sucks. Oh my gosh. So I can move my strike up $15 and pay $10, which I could still, let that get called away. But let me see. That's kind of wild. Yeah, this is fun. Let me go out to, I guess I'll make this decision when I have to. But if I went to July, if I roll this out to July, so quick roll this out to July 18th, I can keep the same strike. So I can roll it up $5 and get another dollar out of that trade, but that's going out an extra 30 days. I'm just going to let this go close to expiration. Right now, I know that I'm sitting on about 17K in profit in MSTR. I don't have to do anything. I'm still going to make 17 grand as long as we stay above 310. But as we get closer to expiration, I can make that decision on a week-to-week roll and just try to get something for it. So if it's offered up, I will. If I should be able to get all the strikes that I need. This is a pretty heavily traded stock now. It's basically a 2 to 3 times leveraged Bitcoin trade. But if I can't do anything, I'm just going to let it get called away. I'll still make money on the trade. But if I can roll it, I will roll it. I just don't want to have to bump out 30 days right now. There we go. We're getting a bump up to the upside. I'm seeing SPY at 565 now. So we're getting a bump intraday. We're making some fresh highs. Let's see if we actually have some follow through. I've got a 570 alarm, so I'm looking to see if it would get up into that level. My liquidity level should be growing. Yep. So this jumped up from like a 350 net now to 537. So it is increasing a little bit. That 570 I put on a butterfly spread this morning. That should hopefully show some profit. Now there's taking a couple hours in the morning. Let's see if we get there. So that would be this trade that I put this morning. SPY. So the call side. Yeah. So I'm up about 30% on the trade right now. I'm trying to turn this one into closer to like 100% if I can. If I can turn this 100%, great. Anything over 100%, awesome. We still have another maybe $4 to get there, but 570 is a strike. If we got some direction on the day, let's see if this holds. So if we clear this high, pause right here, still drift up. I mean, to me, this looks like a directional play. So I think if we have prices stay relatively bullish today, then we had a, gap higher, pullback, try to fill the gap. Price is surging these last 20 minutes, and directionally we can head up towards 570. So not too bad. All right, let's see. Chart alarms are set. I'll be watching this on my other screen, but we're at some fresh highs in the day. Not complaining about some positive P&L. So I'm creeping up towards highs for the year, which is nice. Nasdaq, we did the Nasdaq earlier. I mean, indexes wise, look, we're trying to work our way higher, but I think there's still some resistance ahead. We come back into this March pullback high. That would be like the perfect head and shoulders pattern. So right in here, we come up to this level, we hit some resistance, and then we pull back. Well, there's a head and shoulders, right? I mean, there's going to be lots of interesting price action in here because is there a right shoulder that people buy from? Is there a deeper right shoulder that people buy from? What would be a dumb trade, in my opinion, would be that we don't have any freaking pullback, and all this does is just melt up, and this is a straight V bottom. And we come all the way back to the highs again with no opportunity to really buy. That would piss me off. I want to see some type of pullback that I can say, all right, now I can start leveling back in for a trade to the all-time highs. So I'm thinking resistance is near-ish, but we could hit this March pullback high. Q, same thing. So Nasdaq, look left, we're at the 200 moving average. We're kind of just floundering around above it. But this pullback in March, right around this like 590 area, right around 593. So if we hit 493, do we go a little bit higher and then pull back? I still like the buy the dip, and then see how this survives the dip and see if we get back to all-time highs again. But I'm hoping that buyers at least have an opportunity to get a dip. It would be really frustrating to see this market go to all-time highs with no pullback, because that means the only people that participated were the ones that were courageously buying a global trade war. And sometimes that happens. I mean, I bought the SPY at 496. That's not bad. I bought the Qs at 430. That's not bad. But I'm still, I'd be annoyed that this can't get better, right? So I still have some shares, Qs. Yeah. So I mean, I'm still participating. I sold a lot of premium, like Qs and SPY, like sold puts that worked out pretty well. But anyway, I want to see what happens. But we are making some highs. If you mark that down, 570 is swelling on the SPY. That's a butterfly spread that I'll be watching. So let me see if that one will look a little bit better. I did put in a profit target at 100%. So I paid 22 cents for it. I put in a 44-cent close. We still have another $3.50. I mean, I'm going to bump this up a little bit more. Let's see if we can get this up to like, let's go 60. Let's go 66 cents. So that'd be a 3-to-1. Bitcoin bias. I mean, look at the highs. Bitcoin is postured to look pretty good. I think we at least get if we don't have a pullback. I mean, the melt up continues. Look at 108, 109. We could obviously stall there, but if we break above 108, 109, I mean, I guess we're talking all time highs, and I've got measure moves to like 125, 135, 145. So, enjoy the ride if you get it. All right. So that 22 cents is now trading for 36. getting closer to up about 60% on that butterfly spread. I'm going to try to, I mean, I want to see a triple digit winner on that one if I can. But hopefully we're seeing 570 and change. That would be, I mean, it's not bad. That'd be a $9 move from today's low, but we certainly have enough volatility to get there. The Dow finally back to the 200 moving average. Same thing here, still room. You know, is there rejection here? Is there still room to drift up? Is there still room to make a head and shoulders type trade and pattern? You know, opportunity to buy, get back to all-time highs. So that's kind of my plan across the board right now is if we have, you know, a lot of these like the SPY, the Qs, the Dow, if we have some type of bullish pattern emerge, do we have an opportunity to buy the dip? You know, and I am mindful that this might be a bull trap too. You know, I mean, I'm not saying like this is a guarantee that we you know tap this high, pull back, that this is a buy the dip. One of the trickiest trades would be we get to this level. This is a perfect trap for the bears to say, all right, we got it from here. You know, so I don't want to get super risky by deploying a bunch of capital thinking there's a dip when the market comes back down and revisits the April lows. You know, so I'm still like quite cautious. I just hope we have at least an opportunity to see something pull back. All right, that's that. Russell, we're over $200. I've got that expiration out to next Friday. I'm just going to keep rolling these calls. VIX down again, 2248. See if this settles back into the teens. Bond volatility is down. Let's take a look at our bond market really quickly. I realized I was going to 11:30 already. All good. Gold, I still want to stay out. Silver, I'm waiting to buy 29s and 26s. Bitcoin's looking pretty darn good. Up over 100K again. I'm sure you're going to see some headlines on that later. MicroStrategy over $400 into some fresh highs. Coinbase creeping up higher. Coinbase has earnings today after market, so keep an eye on that one. I don't have any exposure on Coinbase after closing out ratio spreads. Ethereum, get a nice little nudge. Let me see if there's like a headline. You know, is Bitcoin making a run? Anything extremely undervalued against Bitcoin. Yep, we know that. What's happening in crypto? Eyes 100K, traders bearish volatility. I mean, I'm just, is there a why? Is there a catalyst? I'm not seeing anything. Copper, noise. Japanese yen, noise. FXY, this is Japanese yen. Here's EWJ, trying to get this one higher. DAX, right at the all-time highs, close to it. There's Fez. FTSE pulling back a little bit. Argentina, nice rip to the upside. I'm not long. I wanted to get long. I just didn't buy it here. China sideways. Brazil up. Good. Brazil is up. That's good. Latin America is up. I'm long on both of these ETFs. This is LATAM and Brazil. So I bought these essentially at these lows. So I look back and it's like we're trading here at bear market lows. I took a stab at them below the 200 moving average, and I think they both have pretty good looking upside. You know, I mean, can ELF or EWZ get into the mid 30s? I mean, sure. Can ILF get into the high 20s? Sure. You know, this was COVID lows. It's like I was prepared for a dollar cost averaging at 21 and potentially 17. But now that we turn the corner here, it's like we stay above this 200 moving average, moving up into the 29s or 30s would be pretty good. Mags should be up a little bit. Probably led by NVIDIA with that little chip announcement yesterday. So not a ton. I still think this, may face some resistance. This could also be that forced rotation out of Mag 7. So again, are we going to have some type of head and shoulders trade? Is there a pullback here? Can we buy that to break this trend line? Is Mags going to get back to all-time highs? Well, I'm hoping there's a pattern we can spot the trade it that way, right? Apple, 197. Amazon, come on, Amazon. I've got an earnings trade on here. I mean, I'm long Amazon, but I've got an earnings trade. I'm trying to get this thing back above $200. Give me a surge, would you? Let's have a big day on Amazon. Maybe tomorrow, same thing, get some follow through. If not, I'm going to take a small loss in that earnings trade. Broadcom is up to some fresh highs. Google is smoked from yesterday. We'll see if it holds at these April lows at 140. Meta, I'd like to see a pullback on Meta. Microsoft is still ripping to the upside. My dollar cost allocations are good. My ratio spreads are all good. Netflix pausing at the highs. I'm not trying to sell this at all, but NVIDIA news yesterday kind of got it to surge at the end of the day. We're just around that 200 moving average. I think anything on NVIDIA that gets up into the 120s, looks pretty good. I've got a collar trade that I think I've got like a 125 or 130 covered call. Tesla 287. I'm just going to sell my covered calls. 257. It's boring, but I collected $3.85 this week. So if I do it again next week, do it again the week after that, I'm just going to keep collecting income, maybe drive my bottom line. I've got 500 shares. So for every week I can, let's say I pull in $3. I mean, I can probably generate an extra, let's just say for the next 3 weeks, 300 times 500 shares. That's not right. So 900 times 5 accounts. Yeah. So an extra $4,500 to go with my, right now about $8,500 of profit. So just trying to generate some income. And again, I'm missing out on the upside, but I've already got covered calls in. I'm just going to take advantage of them and just keep selling premium. Berkshire Hathaway. I'm just going to stay out of that one. Let's take a look at bonds. Bonds down, bonds down, bonds down. That means yields up, yields up, yields up. Fed didn't cut. Bonds aren't lower. Yields aren't lower. So there's your conundrum. Currencies, again, Japanese yen is weaker today. We have some risk on. We'll see if the markets want to rip up. So that's it. I'll cut it off there for today. Come back and do it again tomorrow. All right, thanks everybody. See you.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.